Personnel Committee meeting. Before I introduce our special guest, I just wanted to explain something to the public and anyone who happens to be watching why there is no public comment at this particular meeting. We circulated a survey to which we got close to 2,000 responses. And for the time being, that's going to supply us with the public input that we need to this process of figuring out what we're going to do with this windfall of $20 million. I want to reassure people that they will have future opportunities to give us input either at program committee meetings or at future legislature meetings. And with that, I'd like to introduce Ryan Gregoire. He is the legislative director for the New York State Association of Counties. And we're very lucky to have him with us tonight to tell us what the rules are. So take it away, Ryan.
Well, thank you, Chairwoman Dawson, and to the members of the legislature who are present this evening. And really thank you for inviting me to partake in this meeting and this discussion. You know, I think I'll start off by saying that your peers across the state and across the country are having the same exact meetings in every other single county. So you're not alone in trying to understand and interpret the U.S. Treasury Department's interim final rule and their FAQ documents, which continue to be updated on a weekly basis, and certainly trying to figure out and plan for what your community needs and what you would like to do to spend this American Rescue Plan Act funding that's coming to Tompkins County. So, you know, I think I'll skip over some of the high level items and maybe get right into some more of the granular detail, and perhaps Chairwoman Dawson, after my remarks, we could open it up for Q&A, but I'll leave that to however you would like to do that. But just to start off, you know, Tompkins County is going to be in totality awarded almost $20 million. I know you've received your first tranche from Treasury, almost $10 million, and then you'll receive your second tranche a year after. And really, you know, just a couple key dates to keep in mind here as you work through the planning process. These funds, both the first tranche and second tranche, do not need to be spent until December 31st, 2026. However, they must be obligated by December 31st, 2024. Now, what does that exactly mean? It's up for a little bit of interpretation. What I would suggest is having in place your contracts or some documentation that says this is the remainder of the funds that we have, this is what it's going to be used for. Have all of that buttoned up by December 31st, 2024, if you're still going to have funding left over going into 2026. The other key deadline that I wanted to mention was on July 9th. So let's see, you know, just a couple of weeks from now, actually not this Friday, next Friday, is the deadline to comment on U.S. Treasury's interim final rule. They've received somewhere around 180, 190 comments to date, last time I checked. Anyone is able to go on there and comment on the final rule. Members of the public, yourselves individually, the legislature, or the government as a whole can submit comments. I would encourage you to do so, because what U.S. Treasury has been doing is they've been collecting and analyzing those questions that have come in, and then updating their FAQ on a weekly, or in some cases, like last week, they updated it twice, on the 24th and on the 30th. And this just allows Treasury to understand some of the scenarios that you're looking to use this funding for. And hopefully they're providing a little bit more guidance as far as, yes, is this an eligible use? Can you do this? Can you do that, etc. So I wanted to just mention those few dates. As far as the 4 different categories of how American Rescue Plan funds can be used. Really, they're pretty broad categories. The first one is to respond to the public health emergency or its negative impacts, including assistance to households, small businesses, or aid to impacted industries such as tourism, travel, and hospitality. The second category is to respond to workers performing essential work during the public health emergency by providing premium pay to eligible workers. The third is for the provision of government services to the extent of the reduction in revenue due to the COVID-19 public health emergency. And then the fourth is to make necessary investments in water, sewer, or broadband infrastructure. And I will say that the vast majority of counties right now, from what I'm hearing through the Association of Counties, is they're really focusing on number 3 and number 4. They're looking at ways to make investments in water, sewer, and broadband. And some counties are actually looking at how do we partner with our towns and non-entitlement communities that may have areas of their municipalities without broadband coverage, for example. How do we partner with them? Because they're also going to be receiving a significant portion, a significant allocation directly from the state of New York. And their money should be coming towards the end of next month from what I've been told. The State Division of Budget is in charge of setting up these regulations, this guidance material for them. But a lot of counties are starting to have conversations. Some are actually reconvening their shared service panels to say, how can we, if we're going to look at broadband, for example, how can we set up a project that leverages both municipal funds through ARPA and some county funds? So I know that folks are looking at that. And then on number 3, which is the reduction in revenue, a lot of counties are going this route because it gives you the most flexibility in what you can use the funds for. So they're going through the calculations right now to figure out, well, how much money, either by using the 4.1% general growth factor or the more specific calculator for your individual county, which I'm sure I see Amy and Lisa are on the call. I'm sure they've gone through that mechanism, or they're working on that to figure out what that lost revenue might look like. But a lot of counties are going through that process to figure out how much can we allocate in this bucket in number 3, because we might want to do some projects that aren't directly specified in the interim rule. And really that lost revenue category grants broad authority for government service delivery. And I'll just point your attention. I'm not going to go in too much into the weeds unless you all would like me to, but if you go to Treasury's FAQ, which is on the NISAC website, if you go to nisac.org//recovery, you can find all these documents, both NACO documents, NISAC guidance, and then U.S. Treasury as well. If you go to the latest U.S. Treasury guidance, which is as of June 24th, Category 3 talks about eligible use and questions under the revenue loss category. And really, it's quite broad as far as what you can use that funding for government services. They can include, but are not limited to, the maintenance of infrastructure or pay-to-go spending for new infrastructure, including roads. You can modernize cybersecurity, including hardware, software, and the protection of critical infrastructure. You can expand health services, environmental remediation, school or educational services, and the provision of police, fire, and other public safety services. The only thing that you can't use ARP funding for, and this is quite explicit in the interim final rule starting on page 130, is paying interest or principal on outstanding debt, replenishing rainy day funds or other reserve funds, or paying settlements on judgments. These are specifically restricted in the federal Treasury guidance. You're not allowed to use those categories. However, I will say that one thing you can do that is permissible is you could use lost revenue funds, and a lot of counties are looking at doing this. you can use lost revenue funds to supplement some county appropriation that you might already be budgeting for in this year's budget. You can use ARPA funds if it's an eligible criteria, and then free up those county dollars for some other purpose. Let's say you have outstanding debt and it has a high interest rate and you want to pay that down. You can free up your county resources to go in and do that. A lot of counties are doing that because they're trying to, they're looking at this, and I would say, and this is across the entire spectrum, most counties and most municipalities are looking at this money as one-time once revenue, right? It's not a recurring appropriation from the federal government. So they're looking at ways that they can spend this in a one-time type of activity. And a lot of times that's capital infrastructure improvements, right? Because they could go out and pay for cash, say, for something that they need to have done right away. Or maybe you have, a long-term capital plan that you're looking at. And, for example, I know Tompkins County passed, I think it was last year, the climate action plan. And there was quite a number of recommendations for projects in there. You could theoretically use this money to jumpstart some of those projects. So a lot of counties are looking at ways, well, how can we use this if it's one-time revenue? How do we use this in a smart way to either, build up new infrastructure for business? Maybe they need to extend sewer and water to certain sections of the county to help incentivize economic development. Really, it runs the gamut on the revenue loss category. So that's really what a lot of folks are focusing on across the state, your peers across the state. And again, like I said, broadband is another big ticket that a lot of counties are looking at using their money for. I think I'll just say that the guidance is still evolving, and NACO, which Tompkins County is a member of the National Association of Counties, they've been having regular FAQ updates, and they've been meeting with U.S. Treasury quite frequently. So one thing I'll keep in mind is if I don't have the answer to one of your questions, and Chairwoman Dawson, I know you sent over that question earlier, and I think I have another interpretation for you that I can share. But certainly, feel free to email us at NISAC or at NACO, because I can kick it up to NACO, and NACO can kick it up to U.S. Treasury to try and get some answers to any questions that are out there. And certainly, if you submit a question to U.S. Treasury, they have been including them in their FAQs. I think the latest FAQ is up to, page 35, which includes a chart showing how to go about calculating really that lost revenue component. So, Deborah, I don't know if you want me to just pause there for a moment. I know I threw a lot out of the gate here, but I'm happy to keep going. Or if there's specific questions or specific areas that you want me to hit, I can do that as well.
Yeah, well, I'll just take a moment and see if anybody has a specific question they want to ask at this point. And Martha has one.
Hey, Ryan, how are you?
Hey, Martha, I'm doing well. How are you?
Good, thanks very much for joining. This is great. I know that Jason Molino sent a number of pages of questions to you guys, I don't know, a month or two ago.
Yeah.
And I think he said you sent them to NACO. Do we have any answers to those yet?
Yeah, so I sent them to NACO, Martha, and then, a week or so after that, NACO got back to me and said they sent it off to Treasury, which I did the same thing. I sent it off to, the IGA, Intergovernmental Affairs folks that I have contacts with as well. And the last I heard, which was maybe, let me see, it was a week and a half ago, was they were still taking a look at the granular questions, and they were going to hopefully get us an answer. I asked them if they could expedite it, because I know that those are some critical questions that you folks have, but I don't have a set of answers to those questions that Jason sent over to me, Martha.
Maybe I haven't looked back through the FAQs lately, so maybe they could have been absorbed into changes that they've already made. So that's something I can take time for. So, okay,
I
thank
think
you.
that some of them have been absorbed.
Okay. All right, great, thanks.
Does anybody else have a question right now, or Mike Stickler?
I just wanted to clarify something. I mean, it sounds like from what you said, there's a way you said a lot of counties were thinking about doing this, was to pay for things next year with this money in our next year's budget this year. And that then the money really kind of becomes unrestricted. So
Yeah.
I get it. What? Go ahead.
I say that's correct, Mike. A lot of counties are looking at, if they want to make significant infrastructure improvements, they're looking at their long-term capital budget saying, what can we front load using ARPA funds to help pay for? And, if they already have certain items that are budgeted, that could free up some funding. Now, one thing that some folks are doing is they're looking at ways to pay for expenses that were incurred, right, from March 3rd on. So let me just highlight that for 1 minute because it triggered my memory here. That for the other categories, it's a little different. This funding is a little different than the CRF counties. This is something that I've been advocating for with the federal government. I'm trying to get U.S. Treasury to broaden the authority to allow counties to go back to the beginning of the federal declaration to claim expenses that were attributed back to the start of the federal declaration, which is what the CRF allocation allowed the big 5 counties to do. It doesn't sound like that's going to happen and materialize. So what that means is, let's say that you wanted to cover expenses for your public health staff that's directly responding to the COVID-19 pandemic. You could do that, but you can only go back to March 3rd of 2021. So some counties are going to be doing that as well, Mike. So there's a little bit of a combination going on as to what they're looking to do. But I'll pause there. I just wanted to make that note as well.
Okay, I just want to say that, yes, we could front load something in the budget and that would free up that amount of money for later, but it wouldn't change this one-time funding into year after year after year. And so that's an important thing to remember. Mike?
Then I guess what I'm hearing is we could take our entire highway budget and say, boom, we're going to pay for that with this fund, that's one of our biggest segments of our budget next year. And then that frees up that amount of money. I mean, that seems weird to me.
Yeah, it does, but it frees up that amount of money for
There's a name for that. It involves a dryer.
Yeah.
I don't want to say what that is, but.
Mike, on that note, I will just put out one cautionary note on that. None of these funds, regardless if you go the revenue loss category or bucket 1 or bucket 2 or bucket 4, they can't be used as a local match to any federal project. So for example, I know a lot of highway projects like new road paving includes Marchicelli funds, but also I think 85% of most roadways are covered by federal funds. You wouldn't be able to use ARPA funds as your 5% local match for that road project because it would be categorized as a match to a federal government funded project. So that would be ineligible. But what you could do is, let's say you've got a $4 million road resurfacing project coming up. You could use $4 million of ARPA funds to pay for that whole project, but you would not be able to only put up 5%, which would be the typical match. So I would only make that one note of caution.
All right, thank you.
Okay, Ryan, do you want to go on, or do you want to talk about the question I sent you?
Yeah, why don't I highlight the question you sent me, Deborah, and for the members on the committee and the public here, Deborah earlier today sent me a question on some housing related eligibility for ARPA funds. And the interim final rule talks about examples of programs and services that counties can do to help individuals who are facing homelessness, to create new affordable housing opportunities, to deal with some housing inequities that might exist in your community. And, you know, initially, Deborah, I sent this off to NACO. I'm still waiting for a response from them. But, you know, after reading the final rule a couple times, my interpretation, and this is just my interpretation, is that, you know, you could probably use housing, use funding for affordable or supportive housing as long as it's either in a qualified census tract or it's provided to populations with within that qualified census tract, or that it's provided to individuals or population disproportionately impacted by COVID. Now, your last question was, well, how do I justify that these populations were disproportionately impacted by COVID? How do you do that? That's a good question. I don't have that magic wand in so to speak, but you know, one thing that I will just note in general, regardless of what you use this money on, is that when the federal government comes to audit the county to determine if you use these funds in their eligible criteria, it's really important to make sure that you have a document paper trail as to how you reach the conclusion that this was an eligible use, because you're going to need that to back up any questions that may rise from the federal government. But in general, Deborah, to your question here, I think what you could do, for example, is I think you could go and set up affordable housing projects in either a qualified census tract, or as long as it's provided to households or businesses or populations that have been impacted by COVID. And I think as long as you can make some connection to either one of those, you would be in good shape.
Thank you. And for the benefit of those of you who haven't had the extreme pleasure of spending hours poring over the interim final rule, it talks about making a presumption that you're providing services to a particularly hard-hit population if that population lives in a qualified census tract. But then it gives you an or. If you can provide it for some other population that's disproportionately impacted by COVID. And the crux of my question, which neither Ryan nor I have a clue how to answer, I guess we'll have to wait for NACO and Treasury, is if you're going to focus on a population that was disproportionately impacted, that's not composed of people in a census tract, how do you justify your determination that that population is, you know, disproportionately impacted? Then that's going to be really important for us to understand. So, okay, thanks, Ryan. You can go on with anything else people want to know or anything else you think we should know.
Yeah, I mean, I think I covered generally where everyone is at in this time frame. You know, I think I will say that not every county has submitted to Treasury to certify that they want the funds. At least that was the case of a couple of weeks ago. Now that may have changed since I last checked in, but the vast majority have already done so. There's no deadline to do that. And like I said, you know, a lot of counties right now are having these internal discussions, just like you guys are having, to figure out what they want to be doing for their community. You know, in the June 24th update and in the June 23rd update, there was a lot of FAQ guidance around some additional items that you can use the recovery funds for. And you know, one item that came out of this whole process was this notion that you can use funds in multiple different ways to improve outdoor spaces like parks. And you know, that was a question that had been submitted by a couple counties. in trying to figure out, they want to make enhancements to their county parks. And that is something that Treasury has said is an eligible use. You can go forward and make investments in outdoor spaces. And you can use the notion that those community benefits were used more during the pandemic, and may need more maintenance, etc. Or that that your local government's ability to effectively administer these services would constitute as a negative economic impact from the pandemic. So you can make a couple of different arguments as to how you could go about doing improvements to parks. I don't know if that's something that the county is looking at, but I did just want to highlight that. That was a new item that came through. And then, the other component that you can do is you can also provide rent, mortgage, and utility assistance, including counseling and legal aid, to prevent eviction or homelessness on top of the emergency rental assistance program. So you could use ARPA funds for that if that was a need that arose in the county. But the only cautionary tale I'll say with that is, and this kind of goes back to what I said earlier, which is a lot of counties, and I think this is a smart way to go. They're really looking at ways to make these investments as one-time once investments, because they don't want to create recurring expense, because then, after this year, how do you go about getting revenue to pay for that annual operating expense? So that's something that everyone's, keeping in the forefront of their minds throughout this process. That's kind of one of the guiding principles that, at least that I've heard from across the state. So, Deborah, I just want to highlight those couple of things to the group.
Okay, thank you, Ryan. We have a question from Henry Granison.
Yes, thank you, Ryan, for your presentation. I was curious whether you would know in how many counties does the lost revenue amount exceed the amounts given by the ARP?
Yeah, that's a great question, Henry. So, I don't have a data set showing me for lost revenue calculations who exceeds their ARPA allocation from the federal government, but I do know that at least from the counties that I've spoken to, which is more than a handful, that those who've run the calculation, their lost revenue is either very close or a significant portion of their ARPA allocation. It's and this is a rough estimate that I'm saying, but I would say that from the counties I've talked to that have done the lost revenue calculation, at least 70% of their federal ARPA match could be thrown into that category.
Thank you.
Thank you. Are there any other questions for Ryan? Martha?
I'm a little confused about the categories that can and can't be. For example, a business or a sector that was impacted by COVID would certainly be childcare.
Yep.
So could childcare, like trying to increase supply of childcare, be covered, and would that have to be in its census tract, or and that, we are trying to focus on one-time expenses too, but sort of increasing supply of childcare could be a one-time expense. Yeah.
So with the childcare, Martha, the understanding that I have is it would have to be allocated, or you would have to make up the population that's been impacted by COVID-19, and you'd probably have to make some definitions and some parameters to justify that a certain segment of the population was impacted by COVID-19, that group of individuals could receive, an increased child care subsidy. Say you were to increase your, child care block grant line item or something to that effect. Yeah, that would certainly be eligible under, as far, from my understanding, that would be eligible under the interim final rule, as long as you're tying it to a population that's been impacted by the COVID-19 emergency.
I'm kind of looking at it from the point of view of the childcare provider. The business has been severely impacted. So, and we've lost providers. So that's clearly an impact of the pandemic. Can we support programs that are prepared to expand and increase the number of slots because we've lost slots? And whether they, not about subsidies, which is an ongoing cost.
Yeah.
But about capital expenses.
Yeah. That's, that's a great question. I just don't know the answer to that one, Martha. I'm going to jot that down, see if I can run that up the chain with NACO.
Thank you. I appreciate that.
Sure.
Okay, while you're doing that, Ryan, got another one from Shauna Black.
Thank you, Deborah. I was wondering about, in our county, we participate in the STEP program, the Solutions to End Homelessness program, and it's been very, very successful. It's helped families in our county to really get their feet on the ground. It helps with deposits as well as rent that's in arrears and helps them with future rent for a year. And it's been proven to actually help people to move forward and to not depend on some of the benefits that the county offers for future. I was wondering, the county pays for half of that, and then the state pays for half of that through ODADA. Typically, in past years, what the county has done is actually supplemented that more because it's been such an effective program. Could some of these funds go to supplement that as long as it's not the one-on-one match?
Yes, I would say yes,
Okay.
Donna, yeah. Because again, my interpretation would be that this program is helping individuals avoid homelessness, right? From the description that you just provided. So, the only, I guess, small yellow flag that's raised is whether or not the OTDA state match is tied to any federal funds. But I understand that if you're going to supplement, if you're going to plus up above and beyond what your 50% match is at the base level, I think you would be okay.
Okay, I mean, something like this just makes sense because I know that we've already done this program. It shows results and we're good at it. It's one program that I think really works. So thank you.
Yeah, I think that would be permissible under the interim rule.
Okay, thanks.
Mm-hmm.
Okay, and Leslie, did you have a question?
Yeah, just a couple follow-ups. Thank you. One on the childcare. If we bundle childcare and we talk about existing businesses, childcare businesses, and we think about frontline staff and the eligibility of the funding for those folks, increased staffing, bringing back staffing will help us to potentially have more slots in existing business. Would that be eligible?
If you were to fund a nonprofit that would bring in additional staff?
Mm-hmm. Yes.
Not sure the answer to that.
Okay.
I'm not sure.
And then separately on the federal match question, are we also limited for New York State match?
No, not
Okay.
as long as it's state funding, no. But if there is any pass-through federal funding, including in that state match, then you'd be restricted on using ARPA funds.
Thank you.
Yep.
All right, any other questions for Ryan? Well, thank you, Ryan. I think that we've exhausted our questions for the moment, and I noticed the minute you get off, we'll think of 6 things we should have asked you, but
Sure.
Ryan's always available to us in the future, so we can always ask again. Ryan, you're welcome to stay, but we'll certainly understand if you don't want to.
Sure. No, I think what I'll do is, I'll take this, these couple of questions on childcare back to the group here. Certainly I'll group with my colleagues at NISAC, but I'll go up to Treasury and NACO to see if I can get some answers. And then as soon as I have any information on these questions or any future questions, or, you know, the series of questions, Martha, that Jason has sent in, you guys know that I'll get it right over to you as fast as I can. So thank you
Okay,
again for
I
having
spoke
me.
too soon. Annie has a question.
Oh, go for it.
Thank you, Ryan. Thank you, Deborah. One thing I was thinking was, for instance, a lot of small businesses were affected. Many small businesses in our county are out of business. And so looking at small business, could we consider something to start, like to put seed money into like a small business incubator?
Yeah, that would be permissible under the final rule. It would be a little easier to do that kind of an activity if you used revenue loss funding rather than a direct allocation to say like a business, kind of like a PPP loan. Is that kind of what you're thinking about, it creating like a PPP loan program?
Well, I'm not sure of exactly how, where the funds would go to, but if we were doing, say, an incubator, where to start up new businesses. So it could be, we provide the facility, for instance, with, like a kitchen, like other different
Okay.
counties have gone, or, where they can use the same conference room and to lower
Yep.
their costs of starting up a new business.
Yeah, I think you could easily make an argument that that would be part of, economic development, and responding to, businesses that were closed by or had negative economic impacts from the COVID-19 pandemic. Yeah, I would say that that would be permissible under the rule.
Thank you.
Okay, Ryan going once, going twice. All right, thanks, Ryan. I'm sure we'll be speaking again. We appreciate your input. It's very helpful to us.
Great. Well, thank you all for having me again, and I'll talk soon.
All right, so now we're going to get an update from Rick Snyder and Amy Hendricks, who've been working on our revenue loss calculation, and Rick may have some information for us too about sales tax.
Good evening. Good to see you all. I'm going to present real quickly before Amy takes over with some of the revenue loss projections. I'm going to update you on sales tax and on the fund balance. These were two issues that came at our last legislative meeting and or budget committee meeting. So I'd like to share my screen, and I hope that you still can see what we're doing under this new format. I'll have it here in a second. Are you able to see this on a monitor?
Yes.
Yes?
Yes.
Thank you. Okay. Fund balance will go pretty quickly tonight, because what I shared with you last time, as we go through this email that I sent you on Friday, I basically said they hadn't changed since what I had sent you a week or two before. So the financial statements, we should be getting a final draft within the next couple of work days. But I am releasing this information to you so that you can see that we're as well off for the end of 2020 as what we predicted about a week or 10 days ago. So a quick review shows that our total fund balance as a county probably went up about 1.7 to $2 million. But if we look at each fund here, you can see that the general fund went up to about $48 million in an unassigned fund balance. And that was about $1.8 million more than the unassigned fund balance for 2019. As a result of the audit, that number has not changed. So I'm 99.5% sure that that is a good, solid number. As we scroll down and look at the special grant fund, which includes workforce and job training, that number did not change. We had an increase in our fund balance of about $339,000. That's all assigned because it's all for a particular purpose or purposes. But that was a favorable increase in our CD fund or special grant fund. Our recycling and waste management fund or solid waste fund had an increase of $384,000 in their unassigned fund balance. Again, that only changed a couple of dollars. The airport is a little bit more complicated. We had an increase of $241,000 in the fund balance. That's kind of distorted because that does include a CARES Act grant to the tune of $1.3 million that we booked before year end. So when you're looking at their fund balance going up to $1.5 million, that would not have been the case if we would not have gotten that $1.3 million CARES Act grant. But at least the airport was able to cover its losses. The next two funds, the D fund, which is the road fund, and the highway machinery fund. The road fund went up about $500,000, up to $1.2 million. The highway machinery fund went down to $169,000. That was a decrease of about $470,000, and that was a planned decrease because we budgeted to use fund balance in that particular highway machinery fund. The enterprise fund stayed about the same at $3.1 million, a slight increase. That's our Tompkins Center for History and Culture. Our capital reserve, that's unallocated to any other specific project, showed a decrease of $545,000. That's because we used some of it for various capital projects. No change in that. Insurance reserve fund, we had a decrease of about $270,000. That's about one of the only funds that we really took a hit, and we did not replenish that fund as of this date. So that's showing a restricted fund balance of $691,000. The workers' comp fund, we had to reserve a lot more money for claims that we may be getting for benefits and awards payable. That number went up $476,000. So now this fund is technically, when you back out all the restricted uses of the money that's there, even though the total fund balance is up to $2 million, we actually have a negative unassigned fund balance. And we'll have to secure additional funding for this in future years, either this year or next year. So that deficit is $193,000, which is manageable. And then our debt service fund is totally allocated for debt service payments. Nevertheless, it went up $701,000, and the balance that is committed or assigned is now about $3 million. So all in all, the numbers haven't changed what we told you 2 weeks ago, and fund balance looks pretty healthy for 2020. Any questions on this? And then I'll share with you some sales tax information.
Lisa has a question for you, Rick.
Okay.
Or just maybe just a statement about the general fund balance at the end of 2020. In the fact that, there were three main things that happened toward the end of 2020 that were good for us. One was we had a health insurance consortium premium holiday in December.
Right.
We had a significant refund from TCAT that we weren't expecting, and some CARES Act revenue that account for probably the vast majority of that. So without those unexpected revenues coming to us, we wouldn't, the fund balance wouldn't have been that high. And the fact that we took all of the actions that we did in terms of the furloughs, the retirement incentive, et cetera, really helped us to keep the budget in check in 2020. So I just wanted to point that out.
Correct.
Rick, okay, Mike, you have a question?
Yeah, Rick, on the insurance reserve, and you noticed that the negative figure there. And we've just had this problem with the transformers at the courthouse, and I understand that's going to be a fairly large project, some of which may be covered by insurance, but will that mean we've got to even think about putting even more toward the insurance reserve?
Yeah, that would be in our MS fund here, the insurance reserve. And that is the one that doesn't show a deficit. It still shows we have $690,000 in assigned fund balance. And that means we have money that's available for things like that. So we're not dangerously low. We took a pretty big hit in our insurance, uses of insurance dollars over the last 2 years. So we may want to plan going forward, putting a little bit more towards the this MS fund or insurance reserve fund. And I think Kevin and the budget that's coming up for 2022 anticipates adding a bit more for the MS fund. But it's not broke, even though it shows zero here, it shows $690,000 of assets that are assigned specifically for in things that we'll have to use for insurance payments.
Yeah, thanks for that. But we never know. We're going to get an unexpected thing happen like the generator issue.
Or like to generate, right?
And doesn't take long to eat up.
Do you have any idea what that dollar amount is to give me a sense of urgency and amount?
Last I heard, our maximum exposure looked to be around $100,000.
Right.
Because it looked, that was the deductible that we're looking at, but we could be covered 100%. So we're still more to be seen. Okay, thank you. Rick, I think Rich has a question for you.
Sure.
Actually, it might be for Lisa. The workers' comp fund, did we get a bump in workers' comp claims during the pandemic?
We may have gotten increased, some additional individuals on workers' comp, but not related to the pandemic. Okay. Without knowing the particulars, yeah.
We did get a large unemployment bill, but most of that has been reimbursed back to us already. Our payments for unemployment went through the roof last year, and then the state and the federal government passed legislation that we would be 100% covered. So most of the payments that we made, I want to say it was like $250,000 when it's usually only maybe $50,000 a year. Most of that has been rebated back to us already.
I think the expanded unemployment, we were getting reimbursed 50% of the unemployment that we. Okay, Martha, you had a question.
Yeah, these reimbursements are like the CARES Act, that helped with public health staff, is that right? The EOC staff, what was?
So there was different departments that received CARES Act. Some went to public health, some went to Office for Aging. There was some that went through emergency response. So there was different segments that received CARES Act funding through their regular state agencies and other agencies.
But that's different from FEMA reimbursements, right?
Correct.
Okay, so do we have outstanding balances? So
Yes.
These numbers don't include all the money we expect we will get from FEMA?
Correct. Yes, we still have outstanding FEMA claims.
Okay. And it's interesting because if we were going to pay public health staff anyway, right? They were in our budget, not counting extra people we hired, but.
The majority of our FEMA claims are not staffing. They are all related to testing. That's where the majority of our FEMA claims, because the FEMA ruling changed in September, so staffing was not allowable expense for a majority of our staff. I don't believe most of our staff actually are FEMA funded.
But CARES Act could have been paying for
CARES Act
staff.
is utilized for some of the public health staffing.
Okay.
Which we increased their staffing with project assistants and others.
Okay. All right, so there's some amount still to come. Got it. Thank you.
Okay, and I just want to interject here that before we got too excited about our fund balance, I want to remind everybody that before COVID hit and in the early stages of COVID, Jason and Rick were talking to us about updating our fund balance policy and that would in effect virtually double the amount that we needed to have reserved in unfunded or unassigned fund balance. So just bear that in mind, because if it goes up to 18%, that means our fund balance has to be somewhere around 36 million. So just a thought. Okay, Rick, do you want to move on to sales tax?
Yes. In the material I sent out on Monday, you should have received an email that has this memo in it, so you can read it at your leisure. And I wanted to go through two things on sales tax. A projection will follow at the very end, but most importantly, I wanted to give some of the ideas or drivers that I've been able to put together after discussions with Lisa Holmes, Drew, my deputy, a lot of things that are in the press, and some things that have been released from Dave Lucas with NISAC. So I was asked to prepare a report that showed where do we think we're going for the rest of this year. So I'm showing here that there are factors that may cause decrease between now and the end of the fiscal year. What are those factors that might cause us to see a loss of sales tax revenue? Well, one of the ideas that came up was the ending of the expanded unemployment benefits in September. That's a dual-edged sword, because we can look at that another way and say, well, those people, some of those will be going back to work. Those people who go back to work will have increased spending, and we might not see a dip. But if there's a lot of people that lose their unemployment benefits or the high degree of benefit that they're receiving right now around September, yes, there could be some loss of spending in our locale based on that. Action by the Federal Reserve, we all know that that's a boogeyman, and we don't know which way they're going to go as inflation raises its ugly head and the Federal Reserve chooses to move or not move. We'll see them probably sticking with low rates well into the end of 2022, but we don't have a crystal ball, and you never know what the economy might do. So action by the Federal Reserve could dampen our economy. And again, inflation, which we didn't have to worry about for the last 6 or 8 years, that's raising its ugly head, and that could really have an effect and an impact on consumer spending. So those are the three things that have been told to me that I should report out on. But one other idea I came up with was, and this was just listening to the news and following it in the press, that automobiles are not available. If you're trying to buy a new car or even a used car, the supply is so low. Most of the dealers in this region in New York State are reporting that they don't have the supply of automobiles to sell that they normally would have at this time of year. Because automobiles is one of the big sectors that generates a lot of sales tax for us, that's going to decrease sales tax receipts between now and the end of the year. So those are the negative factors that we know about, that although we're not certain, that could impact our sales tax dollars. On the other hand, there are a few factors here that show that are positive that could pump up our sales tax receipts. And the first one is, and it's not talked about a lot, you really don't even hear about it a lot. Once in a while, if you're an economic geek, like sometimes I pretend to be, I like to read books and stay in tune with what's happening across the country in our region. And the savings rate for consumers has never been this high since 1946. And that was right after World War II. And what that means is that people are pocketing money and not spending it. And they're either paying down debt or they're sticking it under the mattress. And sooner or later, because we have this high level of savings rate, there's actually a number that's part of this calculation. That number is $1.5 trillion nationwide is being unspent as a result of consumers having this higher percentage of savings in their wallets. And as these consumers feel better about the economy and we get past COVID and people start to go out and about, like you see that they are now, with people starting to travel again, people starting to enjoy their vacations, things are getting a little bit back to normal. As they spend these dollars, that's going to push up sales tax revenues between now and the end of the year. So we have to see that increased savings rate as being money unspent that's going to sooner or later pour its way into the economy. And lastly, the unemployment. I've done a study here as we were doing our financial statements. This is also included in our bond prospectus. The unemployment rate, we keep careful track of it. It is down to 3.6 right now as of May. That's the most recent number that's available, 3.6. And that's from an all-time high, not the all-time high, but an 8.9% in June of 2020. So if you go back 1 year to June, that's when we were in the midst of COVID. Our local rate here was 8.9, and we're now down to 3.6. So as more jobs are generated and more jobs are filled in our area, that's going to increase spending and thus an increase in sales tax dollars. This next chart here at the top, it shows the annual average for Tompkins County compared to New York State. And it goes from 4.4% in 2014 all the way down to 3.6% in 2019. And that spiked up at the end of 2020. It was 6.2 with that 8.9% earlier in June. And down here are the monthly figures for Tompkins County compared to the state. You can see from January to now, it's gone from 5.3 to 5.4. 4.7 to 4.1, and now we're at 3.6 compared to New York State, which is still at 6.9%. So we're doing better than the state, but our numbers are getting back to what we would call full employment. Once again, more workers coming back to work is a good thing. Increased spending, increased sales tax revenue. And the last question I was asked at the end of our last presentation was, because I threw it out there that New York State was changing the distribution, one of the questions, I believe it was from Henry, I'm not quite sure which legislator asked, well, what is the distribution? What did they change? And Dave Lucas responded back and has reported to all the counties saying this, that New York State distributed sales tax on a monthly basis to counties and in New York City, and it was a very volatile distribution method before the pandemic. They have now changed it so that they hope the distributions coming forward will be less volatile. And this paragraph here explains what was being asked a few weeks ago. Tax and Finance at New York State is now using a 3-year history rather than a 1-year history to determine the payment to counties and to New York City in the months between the quarterly filings. By going to this new 3-year smoothing method, they are hoping this will reduce the volatility, but they're not even sure if it will until we get a few quarterly filings under our belt. Our next quarterly filing is in 2 weeks. With the end of June, we'll be presenting to you the June sales tax receipts, and that's the end of the second quarter. So we'll see if the numbers have been more or less volatile as we go forward. The last item I have here is our sales tax projection for the end of the year. Now, this isn't the same as the projection that Lisa and Kevin are making for the end of this year, nor is it the same projections that they might be making for 2022. This is something I did on my own, but I projected out that we would probably match our sales tax receipts during the last 7 months of 2019. We're using that as an indicator for the last 7 months of 2021. So what I've done is I projected the 5 years of actual for 2021, where we are right now as the end of May, and then added the same amounts for the next 7 months as what we had in 2019. Now, this is the same method that Jason and Kevin have been using for the last couple of years to produce a budget for the ensuing fiscal year, but they didn't go back 2 years. They only went back 1 year to 20. They would be going back to what would be 2020 in this case. Well, since 2020 was such a shipwreck, we didn't use that. We're going back to 2019. And when you project it out that way, it shows up like this. The numbers in red down here are the numbers that I plugged in for the rest of the year for the 2021 budget. Let me make it a little bit bigger here. And in this table, you can see where we are right now in 2021. These last 7 months just so happen to be the same as what we got in 2019. So in each case, we plugged in the same amounts for the last 7 months of 2019. When you do that and you add it up, we come in at a little over $39 million for 2021, which is quite a bit more than our budget for 2021. Our budget for 2021 is right here, and it's only 34.5 million. And we're predicting getting about 39 million at this point. Again, this 2021 actual figure that I'm showing you tonight is 0.8% higher than 2019. So if you're comparing it to 2020, it's a whole lot higher. It's about $4.5 million higher. If you compare it to 2019, it's only 0.8% than 2019's actual. The state had said we could get anywhere between 6 and 12% of an increase over and above 2019 actuals. We have not gone anywhere near that robust. We're staying very conservative and saying this figure here is for 2021 is 39 million or 0.8% higher. The way it shows up in this graph is the red line. The first 5 months bring us right up to here. And then it mimics the purple line. This line here is a combination of both the red and purple line, the purple line being 2019. So the next 7 months, we're just using the same as 2019. And that's how we achieved these numbers here to fill in this very early conditional report on what we estimate 2021 will look like by the end of the year. And again, it's pretty much the same methodology as what Jason, Kevin, and I have been using for the last couple of years to predict our next year's budget. Are there any questions on this?
Yeah, we have a question for Mr. Klein, but let me say, first of all, I always appreciate your cheery, optimistic projections, Rick, but in this case, I'm a little concerned about using 2019 numbers. I understand why you don't want to use 2020, but 2019 was also our best year ever. So I guess I would just caution everybody that that trying to project sales tax under the current circumstances, like trying to nail custard pie to the wall. And the best we can do is thank you, Rick, for pointing out the known unknowns, and then there are all the unknown unknowns. So that said, we'll go to Dan.
Thank you. So yes, understanding that this is a projection, it's really, I understand there's a lot of unknown to you. I just want to clarify what you're saying, Rick, that your projection is that our sales tax would come in $4.5 million over what's been budgeted for this year. Is that correct?
Right. Our budget figure here was 34.5, and this projection shows us coming in at 39. So that's $4.5 million, which just happens to be what we lost last year.
Mike?
Rick, am I right that the 2019 figures do not include the internet sales tax? And so we've got that plus for 2020. Now we got in 2020, but we got some of it now in 2021.
Well, you are correct, but let me state that a lot of the internet sales takes away from other bricks and mortar categories. So you have to think of it that way too. If you bought a toaster,
but wasn't it doing that even before we got to sharing it?
Yeah.
Well, we'd like to think that the internet sales is a big plus for us, but and they are, in the sense that we're now getting all the internet sales that we can possibly achieve because it's now law and it's being enacted fairly stringently and being enforced, where before the internet sales dollars that we got were willy-nilly. We don't have any idea how they came up with internet sales. But we must caution this approach. It's not always new money. Some of it is newfound money. And you're right, it's a big plus to have the internet sales move up to one of the top 3 categories when it hardly even existed before as a category. But it does tend to reduce some of the other categories like regular retail sales, other bricks and mortar places. So there are some losses of dollars from other categories in the general scheme of things.
Okay, Henry and then Martha.
Yes, thank you, Rick. I was wondering on the savings issue, whether that is basically due to the pandemic or whether that was started earlier, that people started saving so much money.
Are you saying the savings rate nationwide being so low? Is that what you're referencing?
Yes.
Well, there's a lot of factors. You'd have to get into a more macro look, not just looking at our county, but nationwide. There's a lot of factors that have pushed people towards saving, just saving more dollars. And a lot of that is just people tend to save more dollars when the economy is performing robustly and GDP is up and ever growing and inflation is low. They have more spendable dollars, and some of it they don't choose to spend. They either pay off debt. A lot of people have been paying down their debt, and other people are just beginning to save more. And it's really a healthy figure. Most economists view having a higher savings rate per capita is a good thing, is a better thing than people being overly encumbered with debt. And so it shows a good positive sign of family income and the wisdom of the way families spend across America. But when we see it get to be this high, like 1946 post-World War II levels, you wonder, like, man, when are the people actually going to be able to get out and start spending some of these dollars? So in answer to your question about COVID, it definitely had an impact on people because people couldn't get out. People couldn't get out and spend money like they used to. They couldn't take vacations and they couldn't go on trips and eat at restaurants and buy a lot of the things they used to buy. We were all trapped for over a year. And I'm not talking about we, meaning Tompkins County, but I mean nationwide. You're all familiar with how this lockdown has hurt everybody. So there's been a lot of people that have been hurt by COVID. People have lost jobs, people that have really been on in sad conditions. But on the other hand, there's a lot of people who continue to have their income and just know where to spend it.
Thank you.
Martha?
So it looks like if I'm looking at the monthly numbers, 2021 to compared to 2019, January, we were a little bit below 2019, but February, March, April, and May, we were actually above 2019, right?
Correct.
Okay, and then another factor, like maybe the most important factor in our sales tax is that the Cornell campus is going to be back in person in August. Does anybody know about IC? I wasn't sure if they've announced yet. So it's probably one of our biggest sources of sales tax. So this is good news, and it seems, as usual, I think you're careful and not like, what's the word? Irrational exuberance, wasn't that the phrase?
Yeah.
It seems like a cautiously good report. Thanks a lot, Rick.
Yeah, Rick is always rationally exuberant. So, okay, now we'll move on to Amy's report on what our revenue losses were.
Thank you very much.
Thanks, Rick.
We'll see you at the Budget Committee meeting on the 12th, when you'll all be looking at a draft of our financial statements presented by our auditors.
Oh, I can't wait.
Yes.
So I'm going to walk through our reduction in revenue calculations, which is based on the interim guidance. So you can see that. I also prepared some on the compliance and reporting, but I'll do this piece first, and then we can talk about that as well. So calculating the reduction in revenue, this is all about how we do it. That's what the guidance provided us. It provided us a formula. I'll walk you through the formula. And it talks about the counterfactual trend. So what I won't be presenting to you is the actual revenue loss comparatively. It's using the formulas that have been assigned, because we don't know what the revenue would have looked like. We can make a lot of projections around it, but we don't know what 2020 would have looked like had there not been a pandemic. So how do we determine this? And this is all defined in the guidance and all of the documents. You start off by looking at your base year revenue, and that is the revenue of the full fiscal year prior to the pandemic or public health emergency, so 2019. The base year revenue is then multiplied by this growth adjustment and then divided by the number of months. The number of months are going to vary because we have to recalculate this revenue for every year of the ARPA funding. The growth adjustment is the greater of 4.1%. We can use that, or whatever is greater. You'll see that we did come up with a greater percentage of that growth adjustment. And I'll show that when I get to that slide of what ours looks like. So you use that with the 3 full fiscal years prior to COVID. So we're looking at 19, 18, and 17 actual revenues, and then we identify that. So we use the calculation date, and then we look at the reduction in revenue. So the reduction in revenue is equal to that counterfactual revenue less the actual revenue. So there's a whole formula behind it, and Kevin McGuire, going way back there, Kevin McGuire and I have spent some time figuring out exactly how to do this. There's some things that are included in this calculation and some items that are excluded from the calculation. So included are things like taxes, fees, other revenues to support public services, fees generated by the underlying economy, so enterprise units. Many of these we may not have, things like zoos and ports, not a lot of that happening, but some of the other places do have that. Excluded, there's a variety of things. The biggest thing that is excluded is federal funding. And that's federal funding that's coming to local governments, including CARES Act, Relief Fund, CFR, all of those things are excluded, as well as state transfers to local governments. So it gets a little complicated as we start to look at this, and as more and more guidance comes out, they've acknowledged how complicated this actually gets. And so here are some notes. Lost revenue is calculated for each calendar year. So we're going to have to recalculate it each calendar year that we receive the funding. So you'll see that there's points in time that we make that calculation. Revenues loss is calculated on an entity-wide basis rather than source-by-source basis. So that's one of the clarification pieces that is really helpful because we don't have to go all the way down to kind of the minute. We can stay big picture of the organization. Counties cannot use pre-pandemic projections as a basis to estimate the reduction in revenue. We must use this counterfactual revenue calculation. We can't use our own calculation, and that's just to standardize it across all the municipalities. And then the bottom one is counties should exclude all intergovernmental transfers from the federal government. And this is this is right out of the FAQs. To the extent federal funds are passed through states or other entities or intermingled with funds, recipients should attempt to identify and exclude the federal portion of these funds of the calculation on a best effort basis. And so Kevin and I felt some relief on that because we are doing that best effort basis as we go through this. When we approached it, there were two ways to look at this. We could start with our total budget and then back out all of the federal dollars, or we could build from the bottom up. And there's some tools that we have to do that. So we've played with both of those calculations. And this is where we have come up with our estimates. So what you will see here is you have the base year, which is 2019, base year 1, and base year 2, which is the 3-year total that we're looking at in that calculation. You'll also see the growth factor. So we could choose the 4.1%, or what we have done from that calculation is come up with the 5.65%, which is greater than that growth factor. When we go ahead and use the counterfactual revenue, which is this 172,518,000 number, minus the actual revenue of that year, we're looking at a revenue loss of 27 million. So yeah, that was surprising. We had gone, like I said, various ways to try to look at that. If we were looking at using just that 4.1%, you can see we also see a loss there of 24.8 million. So this is quite a surprise as we did this and used the guidance to make these calculations and bring this forward. And just so you can kind of see what it looks like using this counterfactual revenue projection, we would have been projected to have 172.5 million in 2020, and instead we came in at 145 million. So that is what we're starting with when we look at our revenue projections. And that goes back to that idea of how do we claim that funding? And we are well over what the funding looks like.
So even though that's a really painful number, it does simplify our task when we figure out how to use our ARPA funds, because it means that we can use the less restrictive category of government operations for everything to do with funding.
That's true. And if there's not questions on this, I can talk more about what the compliance looks like for whatever we choose to do.
Shauna.
Yeah, I just want to know, does that take into consideration the reimbursements from FEMA and CARES Act?
It takes all of that out.
Okay.
It takes all of the federal dollars out and backs out anything else that would have been included. GFOA has since we've started this, released a tool that we've now compared that to. When we met with Rick and Drew earlier this week, we walked through it all to ensure that we are taking out and doing that best effort to make sure all the federal funds are not there.
Martha?
So it takes it out. I mean, we actually got that money, but we're not supposed to count it in here.
Right.
Which is why Rick's report is so sunny in comparison. Okay.
Yeah.
So can I ask if, is tourism revenue, is the room tax included in all this?
There will be some of that in there. So you have to remember that this is using a counterfactual formula. This is not our actual revenue at any point. So while we're backing things out, you then have that formula, which changes what we're looking at. So this is projected revenue based on the formula given by them. So it does have those projections in there, but it backs out all of the things that are excluded. Oh, I'm going the wrong way here. Just a second, and I'll show you that excluded slide one more time.
Right, I wasn't sure.
And you can see where these are the different things that we had to make sure we backed out and didn't include.
And excluding that stuff actually makes it look worse than it was, but also advantages us.
Right. So did you have to like figure out that every DSS person like is half of his salary? is
Separate basis. So yes, we use the tools that we have, and we do have a nice database that Kevin has built with ITS that has allowed us to do a lot of this a little easier than what you would think.
Okay, I have Henry and then Annie,
And
and then Dan.
the ALP funding is not based on lost revenue allocation.
It's based on a reduction in revenue. It's not based on lost revenue. So it's not based on, I know it gets confusing.
Counterfactual.
It is counter. My new favorite word.
Let's not
I know, I switched over.
too much, guys. It doesn't have to make sense. It just has to be happy.
Yes,
Yeah.
I understand.
Yeah. So it's not our actuals. We didn't take our own revenues and what we had projected and compare category by category. We had to use their formulas based off of our previous years. And it takes into account the 3 previous years.
Okay, Annie?
I withdraw my question. It makes enough sense to me.
Yeah, can you remind us what the significance of that $27.4 million figure is? What do we do with that?
So in order to have the ARPA funds available to you, you have to show that you have had a revenue loss of greater than the funds available or equal to the funds available. So for us to have the 19.8, is that correct? 19.8, we have to show that we using this formula, lost more revenue.
Okay, so once we've achieved this number that you achieved for us, thank you, we can sort of forget it. We don't, it won't come up.
Kind of.
Okay.
That would be if we choose to use it in category 3,
Right.
which is government services, and we're using the lost revenue calculation. Otherwise, if we use for items 1, 2, or 4, there are separate ways that you have to prove to draw down the funding. So we can do it in one fell swoop if we use under item 3.
So that is the significance of it, is that we can,
It's unrestricted.
Do it
It's
all.
virtually
Yeah,
unrestricted.
Yes.
with accounting for it externally, and then we just, then it's part of our fund balance. Or, no.
Not necessarily.
Okay,
Tell us.
that's enough for now, thank you.
So we can still spend it in 1, 2, or 4 categories. But
Yes.
just, it opens up that category 3 as an additional source of flexibility.
Yes. I know, I wish it were.
Things in category 3 if we want it to be.
Right.
It doesn't mean that we can't use it for the uses that are permissible in 1, 2, and 4.
Yeah, that's what I meant.
It just means that we can use it for things beyond those.
Got you, that's what I meant.
Okay, anybody else? Ready to move on to compliance, because that's going to be real simple.
Oh, this is really simple. So I will start this with, the Treasury just released the compliance and reporting requirements in the last week. However, within that 33-page document, there's the caveat that the portal has not been built yet. So there will be additional guidance coming once that portal is built. So this is just background administrative requirements. Before we can even move any of these things, we have to follow these requirements. So we have to develop and implement our internal controls and share them with the government on how we're going to be making our funding decisions. It doesn't matter which category we're in, we have to talk about that and how we're going to do that. We also have to showcase how we're going to show that we're using this for allowable costs. And there has to be an internal control system there. Some of this we already have in place, but we have to showcase that. The cash management piece, so we've talked about that. We've drawn down the first tranche of funding. It can now be placed in an interest-bearing account. The interest from that account can actually be used for any of the eligible uses. It doesn't have to apply to the ARPA funds. So that's a little different because there is interest, and when you're talking about drawing down $9 million in an interest-bearing account, we can use that fund outside of ARPA. Eligibility, we also have to have policies and procedures around who receives this funding. If we choose to have any subrecipients, there has to be policies and procedures around how we select those subrecipients. If we're going to use equipment or purchase property, we have to ensure that it fits all of the rules and regulations around that as well. Matching level of effort, earmarking. This funding does not require a match. However, you cannot use this funds, and Ren talked about that, for anything that is federally funded. So it can't be used as a matching source. And then expenses for this under this funding have to be incurred by between March 3rd, 2021. As Ryan mentioned, there's been advocacy, but it doesn't seem like it's going anywhere. So March 3rd, 2021 through December 31st, 2024. And we have until December 31st, 2026 to actually expend funds. So it has to be incurred by 2024, but we do have additional time to expend. So more administrative requirements. This is just the beginning. Procurement, suspension, debarment. We have to just make sure that our standards are up to snuff and that we are ensuring that infrastructure, competitive bidding, all of those things are happening with whatever we do with this funding. We can't just, depending on what we choose to do with it, you can't just hand it away. It has to have all of those policies. Any program income. So if we fund to an entity that has program income, we have to document that to show how the income is documented and recorded. And then reporting, there are financial performance and compliance reports. We are in a category that has slightly less reporting, but not really. Once you get into it, you realize there's still a lot of reporting. Other things, subrecipient monitoring. So if we decide to give it to any non-federal entity that we provide funds, we have to make sure that they are monitored and that they have performance indicators. We are looking at the risk and assessing that risk prior to giving it to them. And then there's still time for public comment on all of this. And so if we have additional comments, we can put those in. So this is just kind of the best practices that they've put into place, ensuring that you're doing all of these things. And so as we start to look at this, making sure that we have the written policies and procedures, we do have a lot of this, as I mentioned. We just need to make sure that it's really on top of our game on all of these categories. So making sure that we're documenting how we do things. If we were to go into premium pay, which is a category we could look at, we have to make sure we're showing how we're doing that, how we're choosing to use premium pay, why we're doing that, and what are the requirements there. Codes of conduct, risk-based due diligence, all of these things are just on the record keeping and upcut side of things. And that's just to get the money. And then there's the terms and conditions. So these are simple things in some ways. We already participate in SAM. It's an active account. We use that for most of our federal grants. So ensuring we do that, making sure that all of our records are kept for that minimum of 5 years after we expend all the funds. Make sure that if we receive more than $750,000, we will have that a single audit. That also will apply if we were to award a grant over $750,000. Whomever the subrecipient would also be, would also have that single audit requirement. And then civil rights compliance, which is another piece of all of this, making sure that we are ensuring that the entities receiving the funds are providing them and are not discriminating against individuals if we were to go in that route. Because there's so many different ways to do this, there's a lot of requirements and a lot of different ways to report on it because it is varied. And that's why a lot of your questions, you'll see us say, well, yes, and, or no, and, because there's a lot of variables and it's still being written. So this is what I mentioned. We fall in the metropolitan cities and counties with a population below 250,000 residents, which receive more than 5 million in this funding, which means we have to do an interim report, which is due August 31st of this year. They did say at the Treasury call that it's okay if you don't have all the answers this year, but you're going to have to continue to update the report until the answers are there. And then a project and expenditure report and we fall into the quarterly reporting requirement on that. So we have to do that by October 31st of this year, and then 30 days after the end of each quarter of the subsequent years. So that's 22 reports that will need to be done for each project.
Remember that, people. Okay.
Yes.
Oh, sorry.
Are
Do
you
you want me to
done?
stop there, or do you want me to talk about the interim report?
Well,
It's a lot.
I've got Mike Lane, I've got Rich, I've got Shauna. So maybe this is a good place for questions.
Yeah, before we dive into what these reports actually look like.
Oh, my God.
I'm awestruck. I think COVID has been a feast for federal bureaucrats and lawyers, sure. Here's my question though, and it may be, I don't know whether it's Amy or whether it's Lisa or Rick. There's a lot of compliance here. It's a lot of work. Are we going to be able to manage this internally, or are we going to have to hire help?
To hire help.
Yeah, so we have been talking about it some, and it is allowable that we could use some of this funding to help hire help. I don't know, Lisa.
Given our current structure in admin and finance, we don't have the staff to support this level of auditing, reporting, et cetera. So, yeah.
For example, we would retain an auditing firm, for example, that would help us with this.
Yeah.
I think that makes a lot of sense.
Thanks, Mike. Rich?
The term for repurposing equipment or real estate, would that be like deed restrictions for real property? So you couldn't repurpose it?
Yes.
And say for equipment, if you bought computers, they would have to be used for whatever you bought them for, or?
It does say that. It does say that they have to be used for that intended use, but that's actually pretty common in a lot of the federal grant language, is when you purchase them for a grant.
So what happens if the program finishes or?
And this is one-time funding too.
So we need to be careful of that. Okay, thanks.
Okay, Shauna and then Martha.
Yeah, I just wanted to know, like, from a process standpoint, I mean, our goal is to figure out what we're going to do with this funding. However, next year, as of January 1st, 2022, we're going to have 5 new people here. What, maybe 4 or 5, I don't know. But what does that look like as far as if the new 4 or 5 people don't want to do what we've already agreed to do? I don't know. That's not really a rhetorical question.
What I decide on a budget this year, these new people are going to be stuck next year.
But the thing is that it's putting out funding for the next 4 years, potentially.
Potentially.
Yeah.
Yeah.
Okay.
Martha.
Yeah, I think we only have 10 million, only have 10 million now, so we're not going to spend the second 10 million until next year. We can make a plan for the second 10, but obviously the people who are making those decisions in 2022 are going to be different people. All I was just going to say was that this is proof that there's no free lunch, right?
We can always send it back.
No. In fact, one on my list is money to administer this thing, so.
Yeah. Okay, good. Oh, yes, give us some more good news, Amy.
All right. Yes. So the interim report, this is the report due by July 31st. So a lot of this has been done and I've already provided it to you. It's going through how we get to that $27 million mark that we talked about. So, but then that's the first bullet, and then the explanation on how we're going to be using the revenue replacement funds. Again, we don't have to have a decision because you don't have to say that right now. But the other piece is the note up here that this is the piece that says additional instructions and/or template will be provided. Notice it's due July 31st and the template is not out yet.
It'll be out by July 30th.
Yeah, I know, we have a full month. I don't know what I was thinking. And then there's the quarterly reports. They will cover the date of the award until September 30th of this year. And then they must be submitted to Treasury by October 31st. We then have to do them at the end of each quarter. And this is the broad categories, but I will give you kind of the overview, and I'll share this presentation with all of you so you have it and you can look back on it. And it all comes from that Treasury guidance. This just breaks it down a little bit further. So things like projects, we have to decide what the projects are and how they relate to the work that we're doing as a government. Expenditures, we have to show how they're expending the funds, current, cumulative, both the obligation and the expenditure. So what we're planning to do and how much we've actually used. Project status, there's 4 categories. I'm imagining a drop down or something once that portal is created where you choose which project category they fit in. Pretty simple and straightforward with that. Demographic distribution, and this gets into what Deborah was talking about before, identifying who the project is targeting. And that gets into, is it within that economically disadvantaged community as defined by HUD, or is that a different demographic? And I'm imagining, I might be a little hopeful on this, that there will be more of that clarification on who is really eligible for projects. Subawards, any transfer over $50,000 require an obligation and expenditure information. So a transfer to a subrecipient, which is any other entity, we would have to do a more detailed piece on that. And then civil rights compliance, as mentioned previously.
Amy, can I ask a quick question?
Sure.
If we have subrecipients and they somehow or another run afoul of a restriction, who's on the hook?
I believe we are.
Oh, it's good to know. Thank you.
Yeah, I believe it's a shared responsibility, but I believe there is a piece that we would be, because it says that we need to manage any subrecipients and assess risk before providing it.
And I see Leslie has a question for you too.
Thanks. Amy, we have for which census year we're supposed to be applying for census tract? Are they looking for 2020?
That's a good question, and I don't know the answer of that off the top of my head.
We're all looking for 2020.
Yeah. Previous.
Yeah, I believe it's the current HUD
Yeah.
guideline. So, yeah, the latest on the HUD website.
It's in the original. I don't know off the top of my head. I'd have to look. I think it is ACS, but I'm not sure. So then it gets interesting where we talked about the different categories. So this is for non-infrastructure projects. If we were to provide it to that category, you have to provide additional details for any of these things under that first bucket. So if you were to do payroll for public health and safety, then you have to talk about the number of the FTEs. If we did household assistance, then there's a lot of description about who the households are and how did we determine that those were the households. Small business, description on why those businesses were selected and how we were to do that. Same with travel, tourism, and hospitality. And then if we were to rehire any of the public sector staff, that one's a little more straightforward, just on numbers of FTEs rehired. And then there's some others. Premium pay also falls into that. If we were to look at premium pay, how would we do that? Who would be served? Premium pay can be provided outside of government, so we could provide it to another entity. If we were to do that, we have to have a justification on why we chose to do that and what the entity was. And then revenue replacement, which is what we talked a little bit about. We have to define the general revenue collected and then the calculated revenue loss, which we've done, and then how we're going to use those funds that were allocated. If we were to look at infrastructure projects, then we need different information. So when we would do construction, the projected and actual construction, the initiation of the operations, location. If we were to do broadband projects, which some municipalities are looking at, you have to talk about the geospatial location and how you're deciding that. And then projects over 10 million, there's some additional requirements about providing that certification about laborers and mechanics, making sure that they are receiving prevailing wage and other certifications there. And then broadband in particular has a lot of different requirements for doing broadband, looking at what the technology is, how many miles of that technology, how many households will be increasing their speed, what is the minimum speed at those households, how many meet that, and then looking at the different institutions that are going to be impacted by that broadband service. And then the final one is water and sewer projects, which has probably the least amount of additional information, but we also don't have a lot of those projects, so probably the least relevant to us as well.
Yeah.
And so that's all, and I feel like that's how we all see it, and he's thinking, if anyone's wondering what he's doing.
No, he's wishing he was somewhere else. But
I do. You know, certainly in the pandemic here, with respect to other municipalities in our county, we've been the big brother, big sister to help them understand what we're going ahead with. I can imagine if I was a town supervisor in a small town and was looking at the presentation that Amy just made, I'd be sitting there with my jaw on my desk. I would hope that we could figure out some way that we might be able to assist some of the towns and villages if they need help on some of this reporting requirements. And I, for one, from the county level, be willing to put some money into that to make sure that they don't get messed up in reporting. I mean, you go from, a couple of large towns that probably have the help that they need to get there, to having, in my district, I've got a village with a whole budget of probably under $300,000 the whole year. And they don't have a lot of spare cash to hire help. So I would like us to think about how we can be of assistance to them as well.
And their reporting requirements will look a little different because of their size and what they're required to do. So ours is different than theirs. I think the only one that would be similar would be the city would be similar to us.
okay, I have Dan and then Leslie.
Thank you. Well, that was eye-opening and a little discouraging, I guess, but
But not unexpected, right?
I guess I didn't really get it. So, I mean, it's like this is making me think of the whole thing very differently. So I'm glad I like starting to get the correct information. So a couple of questions. So if we went the route of category 3, where we said we can kind of bill it all as one thing, we still have to report all that? Okay.
Yes.
A couple of times, the HUD quality census tract.
Qualified census tract.
Oh, qualified. Thank you. Didn't read my own writing. Is there a map? Does that exist?
They're in the city.
Yeah.
Could we see that at some point?
Mhm.
Thank you. And then my other thought was about hiring, auditing or bookkeeping or accounting, whatever the correct term would be. I'm wondering if we should consider.
Dan, can only talk once at one
Is that what I sound like? I'm wondering if we should consider trying to hire or arrange for that kind of help on the early side, since maybe every municipality in the state's going to be, in the country is going to be looking for the same kind of help.
That's a good point.
Thanks.
Okay, I've got Leslyn, Annie, and Martha.
Some of what I wanted to say, Amy already covered, just about the other municipalities. It's right here. You can hear me? Is this thing on?
Yes, it is.
Yes, it is. I'm sitting at somebody else's desk, that's why.
Somebody with a
Staring
loud,
at mine over there. You know, the reporting is going to be a little bit different, and so that helped. But I want to emphasize, Mike said earlier about hiring an auditor. I want to emphasize that we're going to need much more than that. I am steeped in federal government reporting quarterly. So I know everything that you just pointed out, what the requirements are, and there's sub-requirements within those requirements. So please note, people, that this is very tedious. So I am looking to you all to really come to us with a full slate of people that you need to hire, because even the compliance with the smaller agencies, if we were to give money to one of those, somebody has to be on top of making sure that they're getting the numbers. And a lot of those numbers include, you know, income levels and the demographics and how people meet, all of those. So it is very tedious. So please do, you know, put together a good plan for more than just auditors or bookkeepers. We need bodies to be working in all of this. So thank you.
Okay, Annie, and then Martha.
Just adding on to what Leslie and others have said, that is something I put in my vision, that we're going to need more people, more staff to do this. In addition, you know, trying to figure out to make sure we're reaching the people that need to be reached, the people that we often talk about, the people who aren't that are traditionally excluded from a lot of this funding, people that have been hurt most by the pandemic. So that doesn't exactly have to do with auditing. You know, if we decide on a certain grants or certain programs that people are going to be eligible for, how do you roll that out? And where do, you know, how do we design the program, which is a little bit different than auditing it? So I just want to make sure that, you know, that we think about all those aspects ahead of time. Thank you.
And Annie, that was the purpose of the question I posed to Ryan, because if you read the interim final rule, it really suggests, at least, that if you're rolling out a program that fits within some of their examples, like affordable housing and homelessness and childcare, they will presume that if it's meeting the needs of people in a qualified census tract, that it's addressing the needs of the disproportionately impacted population. But if you are reaching out to other parts of your community, then you have to go about somehow justifying why that population is disproportionately impacted. And that's going to be really a lot of extra work. So just a thought. So thanks, Martha.
To follow right on that, the national picture, the statewide picture is that low-income people and communities of color were impacted most severely. So can we just stipulate to that we have communities of color and we have low-income folks?
You're not,
or do we have
to deal within this group, though? You're having to meet requirements that Treasury has.
Right. So, but what I sort of was hoping maybe to ask Ryan that. I don't know if he would. So it seems like if we have to go out and show that only the people who might, you know, qualify, like got COVID or something, or literally lost their job, it's hard for me to believe that was really the intention, that we should have to, like, person by person go and document. So I guess I'm trying to, if we can, subsidized housing is obviously for low-income folks. Doesn't that kind of, by definition, meet that stipulation?
Well, I think we're going to have to get that nailed down through NACO. I know this doesn't seem to make very much sense, but this is the Treasury Department. They don't have to make sense.
No, I understand.
Counterfactual.
Yeah, I understand. I'm hoping that, for example, in terms of various reporting and compliance, an organization like INHS does that kind of stuff. Like that's their daily bread and butter. So there might be.
I think Leslin could probably weigh in on this.
I do it every day. I'm in the middle of recording for this one.
Right. So, okay. And then I just wanted to, anyway, just thank you really so much for digging into this. And I, say any resumes that you didn't use for the budget positions, like maybe go back to those folks, maybe bring those folks in like tomorrow. And because, yeah, I think we want to make sure we're doing this right. We want to make sure that our goals are met and not sort of driven by how much compliance we have to do. Okay, thanks a lot.
Okay, is that it for presentation, Amy?
That's all my sunshine.
Oh, yeah.
Let the others have the opportunity.
Shades on, thanks. So I'm going to suggest that we take a quick break and then we'll go to Lisa's presentation. I'm starting to wonder if we're ever going to get to our discussion, but at least we will be much better informed than we were before. So come back in 10 minutes, please. Okay, welcome back, everybody. Now we're going to hear from Lisa with an overview of what the county is going to be needing in the next few years.
Thank you. So this is just put together kind of a high-level overview of some of the needs that we're going to be facing over the next probably 5 to 10 years. And starting with our already existing capital program, which is $120 million total. You know, we have multiple projects in our capital program, not all of which are eligible or appropriate for the use of ARP funds. So I've just kind of gone through and summarized what's in our existing capital program. And the items that fit the bill for ARP, I've put in bold with an asterisk. So under the Department of Emergency Response, we have a dispatch center project and routine equipment replacement, both of which can be 100% New York State funded through an annual grant for infrastructure replacement. So we wouldn't consider those. Facilities, we have a cold storage building, which is slated for construction this year. It's been somewhat delayed due to steel. But the next 3 items could be considered for ARP use. Facility restoration projects at various locations over various years. These are the routine projects that we use for our facilities that would otherwise be bonded. So those lend themselves nicely to ARP. Green facilities projects, which are now slated to occur in various stages between now and 2040, using a mix of federal and state funding as well as general fund. So if the timeline on some of those projects were accelerated to meet the ARP construction completion deadlines, and we didn't use, and federal match wasn't required, those could be considered for ARP funds. We're considering a downtown facility, which could lend itself nicely to pay a portion through ARP cash for capital rather than bond the entire project. Again, it would depend on the project timeline, the construction timeline, and in making that work. The public safety building improvements, I think we have $3 to $4 million there, and we wouldn't be bonding for those. We would use general fund revenues for those rather than bond.
Lisa, can I ask you a quick question?
Sure.
My understanding is that a major piece of the public safety building improvements is the ventilation system, right?
Yes.
So why wouldn't that qualify under ARPA?
Well, it could qualify under ARPA, but I guess the question is if the nature of the projects themselves, we weren't intending to bond. We could use ARPA funds,
Okay.
but we wouldn't be displacing any bonding or debt service. So that's a good point. You could,
Thank you.
we could do that. So that's a good point. Okay. Under the highway,
yes, facilities restorations, that's like when you need a new roof on a building?
yeah, elevators, all of those, you know, and they're bundled together into, you know.
They're basically
projects.
maintenance though, right?
Yes.
Yeah,
Yep.
okay.
Highway, we have some Bridge New York culvert projects and bridge projects, 6 bridge projects. They work really nicely with ARP because you can use them with local share, and there's no federal share in these. The road maintenance projects, ARP funds could be used there. The highway shop and wash bay improvements were intended to be used to use 100% local and funded through reserves, highway reserve funds. ITS infrastructure maintenance and replacement. These are 100% local. Again, we probably could use ARP funds, but
we hadn't planned to bond them. So I guess, actually, I could have highlighted those, but I'm only highlighting those areas where we plan to bond, and that this could save us with the debt service as well. Under the planning department, we have the aquifer study, natural infrastructure, and green fleet. Again, these were 100% local funded and not intended to bond. Recycling and materials management, we have some significant projects around the recycling and solid waste center upgrades, at which we could use the ARP funding toward. The airport, I've summarized here, there are 11 projects total under the airport. Most of those listed will receive a 95% federal funding with a 5% local, so they would not be able to be used with ARP. And we, ahead of us down the road, we are going to be bonding for probably 12.5 million for the terminal expansion project, which will be about $500,000 over the next 25 years toward the capital program toward airports. So that's just that. This kind of sums up the capital program. These are projects that need to be done that we're already committed to doing, and some of which clearly fit the use for ARP funds. On next to reimagining public safety, another major project that we've committed to doing. It's an important one, and addressing the disproportionate impacts on communities of color in the public safety system. So through our plan, the county, in partnership with the city, is committed to seeing a number of projects through to completion, and we're just getting underway. What I'm listing here, and for most of these projects, we are sharing expenses with the city, and what I'm listing is only the county share of those projects. And so the first slide here is, again, just the best estimate as to ongoing expenses that we see so far, 335,000 so far total, many of which will be coming online in 2020 and in years after, as soon as the projects start to take shape, starting with the staffing for the Community Justice Center, the design of community resource hubs or the alternative response model, the redesign and implementation of culturally responsive training programs for law enforcement response, the development of a public safety dashboard, that's probably a little further out, comprehensive and inclusive recruitment strategy for law enforcement and corrections, and programs to support and promote and support holistic officer wellness. So all of these will be ongoing expenses starting.
You're away from your microphone.
So, oh, I'm going in and out. Oh, okay. So, all right. Then a brief list of some one-time needs that we will be seeing with the reimagining, about 343,000 total. So, and as outlined in our plan, we're going to be doing some travel to evaluate existing crisis intervention models to come up with the, the best practices and what we want to implement here. Establishing a pilot program for the handling non-emergency calls, a consultant to help us with the comprehensive community healing plan in collaboration with our local community leaders. We're going to commission a study to identify traffic calming measures and another study around call type delineation and standardization. So all of these are listed as one-time needs around that important work. The next series of slides are, and I sent the legislature a copy of the email, which I sent to department heads soliciting their input on, what they see as upcoming needs. I asked them, are there broader investments that the county should consider to better itself to deliver services and meet the needs of the community over the next 5 to 10 years? And these are the responses we received back. And I also tried to make it clear that this was ideas around the ARP funds above and beyond the typical budget process and the OTR process. However, some of these could lend themselves to OTRs. So this is pretty much what I received back from departments. I've just summarized, and I'm in no priority order here, but just so you have an idea of what departments identified. So upgrading the electrical panels for our downtown facilities to enable generator or battery connections for backup power in emergencies. And the fact that this lightning strike just hit the courthouse is a reminder of that. Investments in cybersecurity, intrusion detection, enhancing our SIEM tool. I'm not going to pretend to know what that is, but I know it's important. Monitor internet bandwidth and network performance. I didn't submit that one, I'm surprised. So also equipping all the county meeting rooms as well as the public library with screens and equipment for hybrid meetings. And we're seeing that now as we're starting to come back to in-person meetings, and advisory committees are actually asking to meet virtually or meet in a hybrid way. Some would like to be able to participate from home. Hiring a consultant to help the county and local municipalities apply for annual resiliency grants to fund projects recommended as priorities in the update to our FEMA hazard mitigation plan, as seen as a priority. Also was recommended a combined fire training center with the city of Ithaca to promote recruitment and training of firefighters. And we know the current facility, the fire tower that's being used is not been able to be used for some time. So a joint training center in partnership with the city could help entire county and community with recruitment and training of firefighters. Some additional highway equipment, and these are larger pieces of machinery or equipment that wouldn't be part of a capital plan, but are large in terms of over target requests. So these aren't part of the highways capital plan. They may make it into the highways over target request, but this was proposed by highway. And I believe that this equipment was postponed from purchase last year. Initiate a better system for translation and service delivery to limited English proficiency populations in Tompkins County. And we certainly saw this need highlighted during the COVID pandemic and response, and the need for critical information to get out to communities in their native languages. So we'd like to continue to improve the way we do that and continue in the future in non-pandemic times. Additionally, public engagement software, again, arising out of the pandemic, but that we have become as a county more engaged than ever before, or citizens have become more engaged with county government than ever before. And we would like to continue that. And reimagining public safety is one such project, but there are many others going forward where we want to have that close engagement with the community. Replacing the software used to compile the annual county budget and finding a system that interfaces much more smoothly and in a better way with our finance system software, because right now the two systems don't talk to one another. Recycling center improvements. These are, again, are above and beyond what are currently in the recycling and solid waste capital budget. So this would be an additional project that we wouldn't be able to get to until 5 or more years from now. So upgrading the yard waste drop-off area to improve material handling, sprinkler system upgrade for fire suppression. We know that fires happen there a couple times a year sometimes. So repairing our old system, refurbishing the metal drop-off area, pavement and drainage retrofit, and a stormwater pond analysis and regrading. Another need identified through recycling are closed landfill capital improvements to adhere to post-closure conditions. So a couple of projects there that we wouldn't otherwise be able to get to for some years in the future. Approver trailer to test up to 150 gallons of heating oil. That's from our Weights and Measures Department. A contract with grant consultants to meet with our departments about priorities, suggest funding opportunities, and prepare grant applications. And also training to enhance service delivery related to stressors from the pandemic and structural racism impacting communities of color. This slide are also, these are ongoing needs, and there are a few caveats here to this one. Ongoing needs include the need for additional staffing, either restoration of staffing or additional staffing levels across multiple departments, which will likely take place through over target requests. I know that that is going to be coming. I didn't start to go through and list what the department's over target requests are yet, because the due date for county budget submission isn't until the end of this week. So they're not all in, and I didn't want to list some and not list others. But just to know that there are multiple departments who will be requesting staffing. From what I know and what I've seen so far, departments are very judicious in what they're asking for, and they are, I think, overall try to be very wise stewards of taxpayer dollars. So I think that, what we'll be seeing will be certainly needed. But back to the first bullet though, an organization-wide compensation study and related salary adjustments. And I'm seeing the need for this from not only my time spent in an interim role in HR, but also I've seen it across the organization in various departments. There are issues around wage compression, wage parity, and our ability to recruit and retain employees. I'm seeing it in, some searches and in a number of areas. It's not just, law enforcement and corrections are having issues, but we're seeing it in our upper levels, and we're seeing it with our existing employees as well as bringing new employees on. So I think that is something that is overdue probably. And so there's not only the cost of the study, but the findings and implementation of that study. If we want to maintain a competitive workforce, it's something that we're going to need to address. And this is an opportunity to do so. I think those are most of my slides here. I wanted to just, the last two slides I'm going to put up because I just wanted to, you've seen before, they were in my previous slide deck, but I wanted to clarify a couple of items because as you know, and from what Amy just went over, none of this in the use of ARP funds is not straightforward, and there are a lot of moving pieces and a lot of variables to consider. So I just wanted to kind of talk about it, if we choose to use ARP funds toward capital. And, you know, these are the three various scenarios that I laid out prior.
You mean for replacing a bonded project? No.
Replacing bonded projects or, yeah, cash for capital, yes. We can, it will, if we use it toward capital to avoid taking on more debt, it then gives us various choices. We can choose to take on more capital projects. So for instance, some of those projects that department heads brought forward around the recycling center, you know, we could take on some more of those. We could advance the timeline of certain projects like the green facilities and the net zero emissions. We could move that forward. Or we can open up capacity in our current operating budget because to spend toward other ongoing needs. We can't do all three. And that's kind of what I wanted to say here, because this is I don't want people to think that we would be able to do all three at the same time. It would give us the choice of doing any of those. So there are many different moving pieces here. But for instance, if we spent 16.8 million toward capital, you can see the comparison versus 8 versus 0. And the savings spent in interest and the debt service and so forth. So, and then this last slide, which you've also seen before too, on this slide, I wanted to again make everyone aware that in this slide, I held the green facilities constant where it is now, where our net zero goals we would remain at 2040. If we move that forward, the bottom line savings would change. So we can run various calculations depending on what variables you want to change, what variables you want to hold constant, but I'll just end there. Thank you, Lisa. Thank you very much. It's a lot of work. Okay, I've got Annie, Mike Lane.
Thank you. Lisa, could you go back to this previous slide, one right before this? So I just want to clarify, for each of these columns, were you saying that each, say, let's take the left one, 9 projects, 16.8 million. Were you saying each of those 3 under there would be the 16 million? Not all 3 combined?
So I think I understand what you're asking. So if we devoted 16.8 million toward cash for capital, those we would not have to increase our capital contribution in 2022. That is true. We could choose, if we wanted to achieve our net zero operation by 2030, we could move that ahead and advance it if this is something that the legislature wanted to do. If we did that, the assumption right now, the current assumption in the capital plan is that we would be using some of our general fund balance toward the to help in that equation, and it would help us avoid spending 2.4 million in interest over 10 years, assuming 2% interest rates. Did that answer your question?
I think so. When you had mentioned something like we can't do all 3, did you mean all 3 columns?
Oh, no, I'm sorry. No, what I meant was we can't do, so when we use ARP for cash for capital, it would enable us to advance our green energy goals. We could move that forward. we could, and it would help us free up some savings in our operational budget. And/or we could move up some, or we could take on additional capital projects. If we did all three of those, it would be very complicated if we did all three of those. We would not be able to maximize some of the savings would be lost or some of the savings would be spent by moving up the green facilities. You know what I'm saying? It wouldn't result in the same net savings.
And we wouldn't be saving the 1.6 million every year because we would simply be having to bond more and sooner in order to move the target date up from 2040 to 2030.
Yeah.
So is that one column, so for the 9 projects, is that inclusive of all the things listed under there?
Yeah.
It is. Okay, that's what I wanted to be clear. You were saying we couldn't do some of this and some of that, but it was, okay, thank you.
Sure. I'm sorry if I overly complicated it. I just wanted people to understand that there are various variables at play.
No, it's okay. It's not counterfactual, so it's good.
You didn't overcomplicate it. It is complicated. So Mike and then Rich.
Yes, I found it very refreshing that you asked the department heads what their thoughts were, and then you reported them to us so that we can get an idea of the range of their thinking. That helps a lot. The one thing that I thought about as you went down the list was, I wondered, did Board of Elections talk at all about voting machines?
No, I didn't hear from Board of Elections. And, to be fair, I gave them about a week or 2. And it was a short turnaround to respond. And I didn't reach out. I didn't have time to reach out to departments that I didn't hear from. So no, I didn't hear from them.
So this may not be an exhaustive list.
Well, that may be like I said, that may be showing up in their budget and their over target requests. So I haven't seen those yet. So that was why that caveat.
Okay.
It's not an inclusive list.
Okay, I've got Rich and then Martha and then Henry.
Amy's report was a real downer. I think, but I'm, you're welcome. But I'm looking at this, I'm wondering, we have another element to balance with everything else, which is sort of reporting efficiency. And it seems like if we are utilizing the funds inside the county for our own purposes, we streamline some of that reporting, and then we free up money that we could use that's unrestricted elsewhere in coming years. So there's some advantage to applying more to capital, it sounds like. And also it sounds like there's an advantage to doing it to fewer projects or isolating it so that, say, if we're doing it $20 here, $20 there, the reporting is going to eat up all of the benefit.
Yeah.
So, yeah, is that accurate?
I would say that's accurate. And I've used the expression death by 1,000 cuts. If we take the 19.8 million and distribute it in $10,000 grants, we are going to be forever reporting.
Thank you.
Okay, thank you, Rich. Martha, Henry, and then Mike Sigler.
So this is like a multi-dimensional Rubik's Cube. I mean, and there more than that many sides to it. For example, and I'm trying to figure out how we can optimize each kind of revenue. So for example, there was an initial agreement on a bipartisan infrastructure bill, and just looking at some of the categories, like, whoa, there might be a whole new pot for roads and bridges and transit. And so like, okay, well, we don't want to pay for roads and bridges with ARPA if we're going to be able to get money for it there. So that's one example. And then the other thing you mentioned, then we can pay for things with unrestricted money, meaning our money, right?
Yes.
However, call Jonathan, because there are a lot of restrictions for what we can use county money for, according to New York State. This issue of we can't give gifts, we can't give gifts to businesses, we can't give to individuals. And there are even these like weird, like we can do a contract with Catholic charities to do security deposits, but we have to be really careful about all that. So it's less clear than it might be. So I'm trying to figure out what's the optimal use of different kinds of money.
Yeah. I mean, we could, through our existing contracts to community agencies and so forth, utilize those. But
so in other words, if we say, well, we want to make sure we get more into security deposits, that's already a contract we have. Okay, got it.
Henry.
Thank you.
I assume that the agencies were going to put in the OTRs whether they wanted, because we lost what, 47 staff positions last year. So I assume they put that in the OTRs
Yeah.
and not in this.
correct, yeah.
Okay. Because do we have any calculations? I know I was looking at Jason's old budget and about his budget retreat, and he had a tourism program that we give them 1.6 million funds over 2 years. We obviously gave them 600,000 recently. Have you done any calculations on how much it would cost to basically refund or fund some of those positions back? Basically put us in the same position we were pre-pandemic?
For county employees,
Yeah.
you saying? No, I haven't yet, because we will be doing that by default when the over target requests come in, and we'll start to tally and see where those, how many we get and the cost of those.
And that's because those are multi-year issues as opposed to one-time issues that we can use the funding for.
Well, I guess, so what we would be considering first is the volume of requests that we get in, the number of positions,
Right.
and looking at our target and where we stand, and trying to understand the best use of which funds are available and the best use. So we may be forced, depending upon where things play out, to use, to use a gliding path
Right.
to target funding restoration for some of those positions.
But we have 4 years to spend this money too.
That's right.
Thanks.
Okay, I've got Sigler and Shauna.
Can I just add one thing to, one of the clarifications is when we asked departments, Lisa mentioned they had the short turnaround. So some of them, you'll see their over target requests may still be one time. So there's an odd balance because of just the timing and how they did it. Because like all of us, they were confused on what's ARPA funding, what is OTR. So there'll be many more over targets that we know of coming in that may fit under this as well.
Mike?
I just want to make two observations. The first two up, yeah. So the first one would be, I'm looking at that was just up, and it looks like we actually, I guess, kind of have to make, if we're going to go that route, kind of make some decisions on what our priorities are when it comes to capital. I mean, for me, a priority is the jail is not sufficient. I'm not saying we're going to build a bigger jail. I'm not saying we're going to build more beds. I'm saying the building's, it's kind of done. I mean, we need new HVAC. There are things that have to be done there to protect the people that we are housing there. But the people that are there, we obviously want them treated. They're in our custody. That seems to be a requirement for us. So that, to me, is like a number one priority. The office building is, that's something we want to do, I think. And so that's much lower on my priority, and yet it was in all three of the things. And that concerns me a little bit, just because I know you get on a road. Like when we bought the property down the street, I figured, heck, worst case scenario, we make it a parking lot and then we have more parking for our people. That was, and it's always going to be worth what we paid, basically. So I didn't have any concerns with that. But that really puts us on a road to saying, yeah, we're going to do this big building that is 10 million is not anywhere near what the price is going to be. My other concern, I think, about going that, I understand that it might be easier to kind of justify the expenditures. I don't know if that's a good way to go, because I haven't heard anybody pipe into me saying, yeah, we should use this on buildings, like nobody. So, I mean, I hear things, mental health, and I'm like, yeah, I think that's probably about right. And it's a lot of things like that, even potholes, right? Listen, I hear about potholes. I don't know what to tell you. That's what people talk about. And that they're cool with that. That's not a building. That's great. I don't have to go to the shock absorber place this week. So I think when we do the expenditures, I think we're really going to kind of keep that in mind. Like, people are watching this. Like, how are you going to spend this? And I think they kind of want us to spend it on stuff that directly impacts them, like right now, or at least as quickly as possible. And I kind of thought that was the point of this word of the day is tranche, and it will be for the next year, I think, this tranche of money. And I get the reporting, I get all that. I'm all for, let's hire somebody, because you guys can't. Not that you can't do that, you shouldn't have to. It's kind of, it takes away from what your jobs are, basically. So that's about it. Those are just the two observations going forward that I have. So.
Thanks, Mike. I have Shauna and Annie.
Yeah, so I actually have the same thoughts as Mike as far as our priority being the jail. I wanted to ask Deborah, I know that all of the legislators sent her a list of priorities and what they would like to do with the funding. And I guess my question right now, after the presentation from Rick and Lisa and Amy, have people's priorities changed with the information that they've received, or should we go forward with reading these recommendations?
Okay. Annie, do you mind waiting until people respond to Shauna's question? Okay, so I see Amanda and Martha.
I mean, that's a really good point. I think, I think we needed this meeting. I needed this meeting. I'm, kind of blown away by all of this. So my priorities absolutely have shifted.
Martha?
Well, when the three of us sat and tried to plan out this meeting, the idea of getting people to write up their priorities before the meeting was actually to get a baseline and understanding that it would change, that people's priorities would change. I think that would still be useful to hear what people said. And obviously that's just the very, very starting point of many conversations. I would like to hear other people's comments and as we sent them in. And if I could just add one other factor to consider, which is the timing, that the spending has to be completed by 2026. So knowing how long it might take to design either a jail or an office building and get it built and all the rest, 2026 may seem like a long time from now, but we really probably have to be careful and map that out and see if that's if those are realistic timeframes. Has to be encumbered by 2024, contracts let and all that. Yeah, so thanks.
Well, okay, so that was Leslie.
Thank you. I think it's important, it's incredibly important that we understand the government needs, and it's helpful to have them all laid out like that. Thank you so much. Obviously, we could spend it now and be done. It would be easy, efficient, quicker. I don't know that that is necessarily taking care of the needs, to Mike's point. There are acute needs. There are needs of households, individuals, businesses. I have to think we've got to make sure that we're attending to those. This was a highly unusual, unprecedented situation, and some folks are really struggling we've got to help. So I just want to make sure that we do this in a balanced way. And I don't think it's a bad idea to hear what folks wrote down, but we have needs in the county government. I think some of those need to be attended to. We also saw some decent news on the budget sheet. So let's be thoughtful about other people's budgets that aren't looking good at all.
Okay, Annie, and then I want to interject something here.
Thank you. So obviously I missed something. I didn't realize our ideas were going to be read to the legislature or in this meeting. So but
Anonymously.
well, I had missed that part. So excuse me, as some people know, I've been preoccupied with some personal stuff, but so in that regard, I mean, I just thought it was kind of like a brain dump. So even if it's anonymously, I'm all for transparency. I just didn't realize that. So I'm not really just thinking like, I don't want mine read. I'm just thinking, I just wasn't aware of that. And in light of this here, all the information that we've gotten, again, I didn't realize that, but so I would lean maybe away from that, but if other people want to, I'm also fine with that. Can I say my other comment?
Sure.
Or, okay. So tagging on with, adding on to what Martha was saying before, and I was thinking this before this too, but I didn't put it in my anonymous comments. But to me, I'm leaning towards spending some of this money on programs that we cannot do otherwise, like talking to our lawyer and finding out, clarification. So if there's things that we want to do to help the community, to help government, whatever help we want to give to the various organizations, including ourselves, is only put most of it in, or a good chunk of it into to the county with not restricted, because why spend all this money in tracking for all these things if we don't have to? But I don't want to lose sight of those things so that but I don't know how long that will take to come up with a big plan, because I don't want to forget that, oh, we can just take this money and do it, but we're going to only do the part here that we have to track. Does that make sense? And I just wanted to add two quick things. People keep mentioning the jail. I think last I heard was 4 million to do some upgrades there. I just want people to consider, what if it costs $10 million to put a pod on there? 4 million, we are to do the HVAC. We're not going to get any of that money back. So I just want to have that in, thinking if we know we want to do something like that in the near future. And people often mention about we don't need to do the office building. Some of this was predicated on looking at a new county office building on the clerk and the DA need to get out of the courthouse. They're being kicked out. And so they're just waiting for us to figure out where they're going to go. And that they take up a lot of space, the departments. Thank you.
Okay, Dave, the quiet man.
Yeah, that's me. Okay, I'm gonna have a moment of silence. Okay, my feeling is we need, first and most of all, to minimize the reporting. Because otherwise it's gonna drive Lisa and everybody else crazy.
And
yeah, and waste money. I think we should leverage $3 to $5 million for broadband, because I think it's a major deficit in the county. And I think it needs to get fixed. There's federal money and state money coming along that they're working on for that. So if we can combine leverage somehow, do something with that. The rest of it, I think we ought to put into capital. And the reason I think we should do that is because it'll free up whatever that number is when we get all done. 15 million, it frees up 15 million. Then we can go spend it to make other things feel better. Okay, to help the arts, to help anything else. Housing, I don't care what it is. But that way And I'm not advocating that we do that for the jail or for the office building or for anything else. I think there's a lot of other stuff that we already have on the list that will eat up what money we'll be able to put into it, at least this year. So I think that's the direction we ought to go. And I'll be pushing to do that.
Thanks, Amanda.
Just want to note that the agenda for tonight lists me as a member. I'm not a member of BCP. Just
And I
saying.
am.
I would actually like to get to Dominic's presentation.
Okay.
If we can get there.
Yeah, I can withhold my comments. Dominic, why don't we move ahead with your presentation?
Do that one moment. Share my screen. I'll just put it up on the big screen for you. Great. As was noted and shared via email with all of you earlier this week, these are the results of the survey we did to the community on behalf of the legislature for input on how to use the funds. I outlined a few process details and limitations. The survey was open for a little less than 2 weeks. Was also downloadable for print in addition to online. I had several mailed to my office that I input one by one. Just under 2,000 responses, which is very good for our surveys. We've run a lot of surveys in the past year. This is one of the best, if not the best. It was shared in typical media release through county social media and to county staff, and then informally through many other networks. Folks like the League of Women Voters and others, there were various who explained to us that they shared it. There were 2 open-ended text questions with several hundred responses that I provided to you all as well. I just took out some identifying information in certain cases. And there were several respondents in the public who noted the overlapping or intersectional nature of some of our questions. So, for example, in one of the questions we asked who is most negatively impacted, and people noted that, as we would all recognize, many of the populations also include communities of color or families or things. They're not necessarily in every case separate. So with those limitations and process notes in mind, these are the demographics of the individuals who filled out the survey. Almost everyone was a Tompkins County resident, and the 36 who didn't bear impact on the other data points in here. And you can see the municipality breakdown. I didn't compare this against population, but at first glance, it looks like we got some respondents in every area, and obviously the city and town are our largest population areas in the county. So this chart is explaining a ranking from each respondent of who was most negatively impacted during the pandemic. So in each of the individual sections, you can see the green bar representing people who ranked it as the first most important or most negatively impacted group. And the bar right is sort of a brown bar. That's where people would have ranked as the 8th. So laying it out this way is a pretty good representation of how people ranked it. So you can see individuals and families who lost work were sort of far and away the top on both the respondent ranking number 1 and 2, essential workers. And then you can see as it sort of carries through. I was surprised by how many people ranked non-for-profit agencies so strongly as the last one. Some people did expand on that in their responses in the text, but I don't know that any true conclusions can be drawn from that. I haven't compared the sort of text answers to how people actually rated these. And this was a question that was, just for clarity, this question was sort of outside of the ARP, any documentation. This was a question that we came up with as our own organization to ask. It's not reflective of any details in the ARP, as the next question is, these are directly related to stipulations within the Act. So in this case, we asked people to only rank their top 3 suggested uses for the funds. Rather on the last one, they could rank all 8. So they selected here their top priority, 2nd and 3rd. So in each of these rows, you can see the sort of the total magnitude of what was ranked in that area. And then each color separated out shows how frequently someone or that was ranked in that category. So responding to the needs of households that suffered economic losses was ranked as the first choice 528 times, and totally a little over 1,000 or 1,100 times. And it sort of goes down as well. So as you can see at the very bottom, the least ranked was providing premium pay to essential workers in the private sector. So I won't go into any more details necessarily on this unless there are any questions where I can go back and forth. I think that is, the last slide. So happy to answer any questions about the process or clarifying any of the data points here.
Anybody have any questions? Martha and then Mike.
Thank you for sending all this and a couple of other files today. And I sort of opened up the text files. Like, I can't even begin to read all these.
I read them all.
Okay, sure. Were there any themes from those? I don't know if that helps differently than this, but were there any themes you pulled out of all those the text comments?
So I'll say that it's going to be hard to share any themes because I think certain groups shared the survey around seeking and encouraging their populations to fill it out. So you'll go in there, and if you just open up that Excel file and search in it for Cass Park.
Oh yeah, lots of things.
Dozens and dozens of people who felt that those fields were unplayable, et cetera. And in some cases, you can see some copy and pasted answers in there.
Lots too.
Yes, and lots of potholes as well. Lots of people talked about the roads, as has been mentioned here. Other themes, like I mentioned, were the noting of the intersectional areas. A lot of mention of, I think, equity and people of color disproportionately impacted by the pandemic. But beyond that, yeah, I'd be hesitant to give anything further because of the nature of how it was shared.
Thank you.
Mm-hmm.
Mike, and then Amanda.
Questions, you've mentioned premium pay. Was that defined in any way? Just a term there.
I think the public sector, there was the parenthetical after public sector just to explain some of who those individuals may have been. Government, essentially, that's what it was. But beyond that, no, there was no further explanation on premium pay. We did link to the document and the interim rule that people could click through to read if they wanted further detail. I did not read the entire ARP, so I'm not sure what they may have gathered from that.
Amanda and then Lisa.
Oh, well, I can answer Mike's question. It's defined in the ARP, I think, as an additional $13 an hour.
It's a bonus or?
It's a way of compensating people for having to get out and work and expose themselves during the pandemic. And as I understand it, and I may be wrong, even though the period during which we can use funds doesn't start until March 3rd, we can actually give retroactive premium pay to people who worked starting from when the emergency was declared. So that would have been in March of 2020.
Yeah, the premium pay is a little odd because there's also caveats on how much premium pay and what the base pay
Right.
is. So it is a bonus in some instances, and in other instances, it's bringing up to a regular pay scale. So there's a lot of nuances there that someone would have to dig into the guidance to really understand what that meant.
Okay, Amanda?
Thanks, Dominic. I'm just wondering about that last bar on the bottom. Is that blue one 1,100?
I believe it's 51, 100, and then 94.
Okay.
There's just no separator.
Gotcha. Thanks.
Okay, any other questions for Dominic? Mike Sigler?
The premium pay for public sector workers, I want to know how you were able to vote 155 times.
I filled out the survey just once.
All right.
Okay, thank you, Dominic. I want to
Average.
That's right.
take this opportunity to thank the almost 2,000 people who took the time to take the survey and let us know their preferences. I did read through all the comments, and I noticed that quite a few people were upset with us because they did not appreciate the categories that we presented them with. And I want to assure them that we did not pull them out of our ears, that they are actually right out of the statute and right out of the interim final rule that Treasury put out. And another thing that I saw many comments about how difficult it was to rank order these various uses. I want to quote a couple of them. Somebody wrote, "This is like Sophie's Choice." And somebody else said, "There's so much need, it's unreasonable to ask us to prioritize." And truly, I agree and feel your pain, but yeah, the people sitting in this room don't have a choice. We do have to prioritize. Sorry, guys. So now I guess we're going to read people's vision statements. Martha?
Excuse me, yeah, I want to ask, to follow up something Mike Lane said earlier about other municipalities. And the question was about helping them with reporting, but I think they maybe have less to do. But I think it was at HED last week that we talked about coordinating with the city, and Lisa, you were going to reach out, because I mean, I did the math. Per capita, the city is going to get about $526 per person, and we're getting about $180 per person. So I want to just kind of make sure, even if that weren't true, I really think to be strategic, we really especially have to work with the city. And I wondered if you have any news.
Yes, I did speak with the mayor about the city and the city's process, and he said that this would be fine to share in an open forum, that the city has a group of staffers who are going to be reviewing requests that come in by departments and agencies. And they will be reviewing those requests, making recommendations, which will be shared with the mayor and then voted on by common council. So it will be a part of their budget review process. He also said that there is they have carved out a portion for kind of economic development, where they will, and he and I both agreed that this would be a great place for the county and the city to partner and talk, because they plan on reviewing grant requests regarding economic development. The Downtown Ithaca Alliance, the entities which provide economic development will be submitting a request all jointly, and that will be reviewed in the same process, and a recommendation will be made. So they will be very interested to know what we have been doing to date to support these agencies and what we plan to do in the future. So that was certainly one area where it would make sense to partner with the city.
Thanks, Lisa.
Okay, so now, Henry?
Well, Lisa, did they talk about paying any debt, any idea for debt for future capital campaigning?
No, because they haven't started. They're going to be reviewing those applications, or reviewing the requests in July and August, I believe. So that process hasn't begun yet. So they haven't started looking at what is being recommended.
Okay, so now Leslyn and Shauna and I are going to read these vision statements. Mike, do we have to do this now?
Please, just real short. I just wanted to say that I chose not to submit a wish list. and it's fine that everybody reads them, but my feeling continues to be we need to get the input from our residents and from the way we've been listening tonight before we begin our discussion.
That said, who's got legislator number one? I guess that would be Leslie.
I'm sorry, I was thinking about what Mike said and Andy as well. And just wondering if you do want to proceed, and it seems like you do. I don't know other legislators whether or not. So
We could take a straw poll. Who wants to hear these now?
I'm also looking at the time and being cognizant of that as well. So just tell me what you want me to do.
Yeah, who wants to hear these now? Raise your hand. Okay, so that's 1, 2, 3, 4, 5. I think we can put this off and allow people who have changed their mind by virtue of what they heard tonight.
Can I make a request?
Yeah,
I mean, I wouldn't mind seeing everybody. I mean, I can read, I don't need these read to me.
okay, I can forward them to everybody. That would be fine.
Did you anonymously like assemble them into one document or something?
Yeah, I suppose I could do that too.
I mean, and I wouldn't even mind another meeting to then talk about them. I mean,
Well, we're probably going to have another.
Right.
Yeah, I want to say a couple things because I think I've let everybody talk. You know, there's.
You know, I put my cough drop in, got my voice together. I was ready.
I understand.
You could sing us out.
You know, the highlighted portions, like, come on now.
Well, I just know that my list is going to put so much shame on everybody else. I feel that we might need more time.
It's like 12 pages, Mike.
This is what I'm saying.
We think you're so big.
Get it together. All right, I'll be honest about this. My preference is to use as much as possible of this money to put into cash for capital, and my reasons are several. I think that we should bear in mind the fact, for one thing, that politically it's going to be impossible for us to justify increasing our tax rate this year because people are hurting, and the popular perception is that the county's swimming in money. Keeping the tax rate level at its current level is a way to give everybody a bit of a break. At a time, I think, when people are hurting, and the only problem I have with that is that there's a compounding effect when we hold the tax rate level or when we lower taxes, and we have to factor that in. But my preference for cash for capital investment is that it reduces our debt service payments going forward 10 or 15 or even more years. Thereby, it turns one-time money into smaller amounts of money that are available every year for a long time into the future. I calculated that under Lisa's scenario of investing 16.8 million in cash for capital, that saves us 1.6 million a year in debt service, which is a good 3% of our levy. I ask people to consider how it would be to have a 3% cushion every year, paid or more.
Repeat that dollar figure.
Well, Lisa's figure was $1.6 million in debt service saved for us.
Isn't it debt service plus the principal payments? It's not just the debt service saved.
It's 1.6 million a year, Lisa. In debt.
No, debt plus principal. In other words, we're paying part of the actual debt is the interest that we're paying extra because we've borrowed. That's actually a relatively small amount, but because you're paying the principal as well.
Well, yes, because when you borrow money, you have to pay principal.
Right, but
so when you calculate your debt service in a year, you have to consider not just the amount of interest you're paying, but how much you're expected to pay back in principal. The total of that is $1.6 million, and that is 3% of our levy, roughly. So that's my primary concern, is setting the county up so that going into the future, we have that cushion. I mean, we've been really fortunate. I know some of you who've been on the legislature for a very long time are part of the reason why we've been fortunate. We got through last year pretty comfortably. We didn't terribly difficult decisions because we had a healthy fund balance. I don't want 10 years from now in this legislature to look back and say, what did these people do with $20 million and why are we hurting now? And then the other thing I want people to remember is that as we consider what is money for the county's operations or for investments in the larger community, that many of the needs and recipients may have had or continue to funding streams that the county does not. In ARPA alone, there's $56 billion in direct aid to individuals and businesses, $56 billion in programs for families and individuals, education and childcare, 40 transportation, and $6 billion for other programs, including everything from emergency relief to endowment for the arts. It's also that the 3 federal stimulus bills so far have allocated a total of $756 billion to the business sector. So, you know, we've got to weigh and balance all of these pieces going forward. And on top of that, we need to bear in all that we are going to be confronting in the next 10 years and the cost of accounting for every penny that we allocate to this. So thanks for listening. And now I guess that's all I have to say. Amanda?
Well, my question is about, we've been here for 3 hours. We've taken in a lot of information, and I'm just wondering, Madam Chair, what our plan is. Are we going to start debating this now? Does everybody get a turn to just say what they want? Are you wanting us to walk out of here with something? So that's my question.
It's really up to you. I'm just a referee. Let's, Mike.
So I appreciate the conversation.
Microphone.
I appreciate the conversation tonight. I appreciate all the information that was shared. Amanda, said earlier, certainly, things have shifted for her. Deborah, you're going to send out a compiled list of all the brainstormed ideas that we put together. And I was just wondering if there's the will of this body to have another conversation like this after we've seen the list, we've talked about it, digested some of this information more, to then start talking about what do we do? How do we spend, these dollars? How much of it do you give to me as part of my retirement gift? And
we're
continuing on. So, and I see nods on the table that we might want to do that because I need time to process all of this plus what you would send to us.
Okay, I think that's fair. I know, Mike, that you want to speak. I just want to make people aware that move on the initial piece of this fairly quickly. And the initial piece of this, as I outlined in the email that you all got, was that we make a decision about what we're giving for the operations versus what we're giving for the larger community, because administration needs clarity on this point for putting together a capital plan, basic piece of our budget. And budget's going to be enough this year because of our personnel issues. So I will work with Kathy to figure out a time when we can have another meeting like this. And meanwhile, I have Mike Sigler, Martha, and Rich John.
I'll be quick. I just wanted to, I understand your point about interest in the principal. I side much more with Martha. I mean, I look at it from a more, I just bring this up because this actually is kind of a philosophical, this will be a question for us forever. When I pay my mortgage, I don't worry about the principal. It's the interest that aggravates me. not the principal. The principal paying the principal, that's like me saving money. That's great. And I bring this up, well,
Cash flow, Mike, what?
well, and that's, I'm gonna bring up this, no, I'll bring up this other point. When you guys built this, 41-year-old Mike Sigler shouldn't have had to foot the whole bill for this. So it's nice that you bonded for it because 41-year-old Mike Sigler paid for it, 42-year-old, 43-year-old, it shouldn't be completely borne by the people that are alive at that moment. There's no reason that the people 10 years from now aren't also paying for this building because they're using the building as well. So it's just a way of looking at borrowing. And so I understand what you're saying, but I also understand what Martha's saying is that it's really the interest that is the part that's sticking it to you. It's not and they're not sticking it. I mean, they loaned you the money, so good. But that's the part that you go, oh God, why am I paying that? And the principal, I think most people understand that because they pay their mortgages and they don't look at the principal and go, oh God, why am I paying that? You know what I'm saying? So anyway, that's how I look at that. So.
Martha?
Yeah, I think it's part of this multifaceted Rubik's Cube. It's the cost of money too. It's like $100,000 now, in 10 years it has less value. So, but anyway, I wanted to say, let's just, another meeting. That's what I was going to ask for. And you already mentioned that. Thanks.
Okay, Rich and then Dan.
Just a question of if you're going to share the statements from the different legislators, does it make sense, given that they've now had input tonight, to take amended versions, or do you want to use the ones you have?
If you all want to send new versions of your statements, or you can resend your old ones, that's one item I don't have to put on my to-do list. And thank you, Rich.
Second bite at the apple.
I'd have you give us a deadline when you need them.
Well, yeah, the next meeting is, do you think y'all can do it by next Monday? Okay, great.
Deborah, can you repeat something you said a little while ago about administration needs to know going into budget how much might be in the capital? Is that what you said?
In the capital plan. I think Lisa can explain that better than I can.
Yeah, so we will be in 2 weeks going into the budget discussions with departments wall to wall for 3 weeks straight with Kevin for 2 of those weeks, bringing in new staff with certain assumptions built into what latitude we have around spending based on the capital plan, which is not yet completed, and which, this is going to be a very, I'll be honest, a hairy process for all of us because, I'm going to be bringing new staff on, acclimating them to the county, to the budget process, which it's a very unique software, and our process and way of doing things is unique, and doing that in combination with all of the variables of ARP funding and the capital plan and just the regular budget process. So it's going to be incredibly challenging. So having any piece of this nailed down as quickly as possible would help in this process. And that's what we're asking about.
Yeah, that totally makes sense. So I'm thinking, as I'm thinking about this, I know that I started out my vision statement by saying I would give 50% as cash for capital, and then I continued from there and I kind of broke down the rest of it. And I heard, I think Dave, you said something similar. You said like a percent for cash for capital, and maybe I even heard one other person say that. And I'm wondering, just kind of wondering, maybe a lot of us have something like that in mind, and maybe we could try to focus our vision statement part 2 that's due on Monday. With that, start your vision statement with that sentence, just to see where we're at. Maybe that would be a start at solving that piece of that puzzle, which has a little more of a time.
That's a great idea, but I would refer to this as the double vision statement.
That's good. I'll accept that.
Are you suggesting, I'm sorry.
Yeah, go ahead, Leslie.
Are you suggesting, Dan, that we start our double vision statement with considering a portion for the.
Yeah, what would our recommendation be?
Is that what you're saying?
Correct, yes.
Because that's an assumption that everybody is there. And if
It could
people are
be
not
zero.
there, then
It
they
could be
don't.
zero.
do that.
It's
Okay,
a zero, yeah,
it
but
could be zero. Thank you.
Okay, anything else? If not, I want to thank you all for listening so carefully. I want to thank all the staff for all the work they've put informing us. And we'll see you all again soon. Thank you. We're adjourned.
All right.